Alrighty. What's up? What's up? What's up? What's up, YouTube? How are we doing today? Good morning, everybody. Or good afternoon, I should say. It's about 11:30 a.m. Central Standard Time, where I'm chilling and living right now. My family, my full of friends, family, and gorilla gang. Drop some gorillas in the chat. Let's just get her warming up. Let's have some fun here. We're gonna keep this nice and chill. We're going to keep it nice and chill. We're going to do some research on different companies that you guys want to look into. So, primarily, I know that there's a couple of things that have been brought up to my attention by a lot of different people, and that would include Bitcoin, Rolls-Royce. Those are probably the two that I've seen pop up the most. And then most recently, as of today, I've seen quite a few people asking about the shareholders vote. So we're going to take a deep dive and read through the freaking articles that we've got bouncing around today regarding that shareholders vote. And if you're not familiar, most people got an email about a shareholders vote, and I'm actually going to pull this up and show you exactly what I'm talking about. So we're going to pull up this proxy statement and show you exactly what people are voting on, and it would be this: the notice of annual meeting of stockholders to be held on May 4th, 2021. And there were two different, articles that were pulled up and given in this email. One of them is a annual report, which is a PDF, and then we got the proxy statement. So this is telling you exactly what you're voting on. And then we've got a freaking 172-page document talking about the annual report to stockholders, which has a plethora of information that we can dig into if we would like to do so. So this will be pretty chill live stream. We're going to keep it nice and relaxed, just kind of go with the flow and see what we want to talk about. But I think that is the likely three that we'll focus on the most, and we'll just go from there. So how's everybody doing today? AMC vote. Should I have voted yes on that vote? We'll talk about it. We'll talk about it, guys. There are pros and cons to both of the options that we have here. So with this annual meeting of stockholders, these are the six things that they're voting on, right? So we're just going to read this off here really quick. The first one is to approve an amendment to our third amended and restated certificate of incorporation to increase the total number of shares of Class A common stock per value of 1 cent per share. The company shall have the authority to issue by 500 million shares to a total of 1 billion shares of Class A common stock, which is proposal 1, right? So essentially what this is saying is, hey, if we want to, and this doesn't mean they're going to, they say we reserve the right, not the obligation, to issue another 500 million shares of Class A common stock, if we would like to the overall outstanding shares and the shares available for trading, right? So that's an opportunity here. You can vote yes or you can vote no to that. Now, if they vote yes and the majority is yes, that does not necessarily mean that they're going to exercise the right, not the obligation, to issue 500 million shares of common Class A stock. That just means that they have the opportunity to if they needed to. Now, I think about this all the time. What would be the reasoning for why AMC would want to issue another 500 million shares of common stock, right? What would be the reasoning for this? Well, to me, it's in the best interest of the company not to dilute if they have the opportunity to avoid it. So if they're going to dilute, which is going to decrease the amount of the worth of each stock, you increase supply, which decreases demand. Why would they want to do that? Well, my personal opinion, this is my opinion, right? I can't tell you what the company's thinking, but if I was a CEO of a company and I was trying to do what was best for my company, and you know that you were possibly looking at an acquisition with AMC and Amazon, or AMC and Netflix, this could be a way for Amazon or Netflix to get a major shareholder stake in the company. Now, that doesn't say that I'm going to vote yes to this or to vote no. We're going to keep reading through it, kind of make up our minds as we read through this document and see what they're looking at and what the reasoning is, as I'm sure they're going to outline that. I'm sure they're going to say why they want to issue 500 million shares. But with that, if there's only, let's say, 450 million shares that are circulating around the market, right? So let's just pull this up. We're going to find out exactly how many shares we have available for trading right now. So if we just pull up AMC on Market Watch, this will tell us how many shares are outstanding, how many shares are available to the public, right? So let's just pull this up really quick. We'll take a quick peeky wiki, as you guys always say, and we have a public float of 446 million total shares out of a shares outstanding of 450 million, meaning that currently there are 446 million total shares available to the public, right, for trading. So with that being said, Amazon or Netflix would not be able to buy enough shares to be able to be a major shareholder in the company to have voting rights. So that would be my personal hypothesis. That would be why I would, as a company, as a CEO of a company, vote yes to that, or even propose that, is if you're looking for Amazon or Netflix to be an acquisition candidate for a company. So that's just the first little piece of this. There's quite a bit, obviously, that we got to dig into here, but that was the first little piece. So I'm reading a lot in the chat that people are saying they're voting no. which is good. I mean, it's entirely up to you. You guys pull the trigger. It's not up to me in the least bit. We're going to read through this, right? We're going to look through all the pros and the cons of what would be the potential here, upside to voting yes or no to this piece of it. Dude, want to save the hedgies? Heck no. I love it, man. You guys know what it is. News first, then yes. Is it strange that I received a vote from my Webull account and not my Robinhood account? That is a little bit strange. I'm not going to lie to you, because I got an email from both my brokerage firms. Both my brokerages that I'm holding AMC stock in, I got an email from both of them saying, hey, you reserve the right to, not the obligation, the right to vote on this, since it is a shareholders meeting. It's a stockholders meeting, right? So it's entirely up to you. And there's a couple different ways that you can play out the vote, right? So let's see if I can find exactly where this was. And it'll tell you exactly the ways that you can vote. So you can vote on the day of the shareholders meeting if you'd like to do that, or you can vote ahead of time. Personally, I'm going to vote ahead of time. I'm going to read through this document as much as I can and see what we're digging, see what we're laying down, so we're cooking with Crisco and we can just get this out of the way. So that's the first piece. Second piece, to elect our board of directors, the following nominees for terms expiring at the 2024 annual meeting: Mr. Philip Latter, Mr. Gary F. Locke, and Mr. Adam J. Sussman. That's proposal 2. So you get to vote yes or no to every single one of these. The third one is to ratify the appointment of Ernst & Young LLP as our independent registered public accounting firm for 2021. Now, what is important about Ernst & Young LLP? To be honest with you, I don't know anything about that company, that firm. But I will tell you is it's important to look into that LLP in and of itself so that you can decide if that's a good LLP to represent AMC for a registered public accounting firm, so that they can handle all of these sort of back deals that would be, playing into that 500 million share dilution, right? So they play into direct offerings. They'd be able to work with raising capital for the company. It's just basically the middleman that handles that sort of stuff. So you just want to make sure that's a good company that is representing them, and we can look into that down the road as well. Fourth proposal is to conduct a non-binding advisory vote to approve the compensation of named executive officers. So what would this mean? I would anticipate that as just basically incentive, right? So being able to compensate the executive officers, that'd be like the board of directors, the people who are in charge of the company, who are working with the company, making sure that they can get compensated accordingly for their hard work. So I'm not against that the least bit. I'll likely vote yes to that. In fact, I think that it's a good thing to compensate and incentivize workers, because people don't want to do things for no compensation, right? That's very important to keep in the back of your mind. The fifth one is to approve an amendment to our 2013 Equity Incentive Plan, the EIP, to 1, increase the total number of shares subject to the EIP to 35 million shares of Class A common stock, 2, to revise the share replenishment provision, and 3, eliminate the mandatory expiration of the EIP. So what does this mean? This last piece is talking about the expiration of EIP, right? So what is that saying is they're not going to get rid of this 2013 Equity Incentive Plan. Now, what is the Equity Incentive Plan? I would anticipate this is a way that they can compensate through equity, through Class A common stock, their board of directors and any sort of employees that work for AMC. They can use this Class A common stock to incentivize people, say, hey, this is a way that we can compensate you. We can give you some incentive through this Class A common stock. And I'm not against that, obviously, in the least bit. I hold a pretty good stake in AMC. And if there are insiders or employees that work for the company and they want this to happen, that's a good sign. So I'm 100% okay with that. I would say that's a go for me. I'm going to likely vote yes to that. And then the last piece is to approve the adjournment of the annual meeting to a later date or dates, if necessary or appropriate, to solicit additional proxies if there are insufficient votes to adopt the proposals. This is basically saying if we need to push this further to the right? If we can't make everything happen on this date, which would be May 4th, if I can remember correctly, and sure it is, May 4th, may the 4th be with you, baby. Oh yeah, Yoda. If you vote yes to this, it just gives them the right to be able to push this to the right, that overall shareholders meeting, so they can make things happen if they want to make things happen. So that's what we're looking at right here. This document is 84 pages long. Personally, I think it'd be a good idea to roll through this document so that we can read each individual piece of this and see what's important to keep in the back of our minds as we're making our own individual votes. If you've already voted and you are good to go, rock on. There you go, man. We're going to look into this AMC shareholders vote first, and then we can dig into some other companies. I do want to roll into Rolls-Royce. I've had quite a few people that are interested in that. So I think it'd be good to research the company, see what the potential upside is there. And then you guys can see my personal process of what I look for when I'm researching companies for a long-term position, which is what I think Rolls-Royce would be, or at the very least, a good recovery position. And then after that, I'd like to dig into Bitcoin. I am bullish on Bitcoin. I do have a position in Bitcoin. I own about a quarter of a Bitcoin. And we can dig into that as well, what the potential upsides are for Bitcoin also. So with that being said, It's good to have you all here. Hope you're all cooking with Crisco. Drop a like on the video. Helps the YouTube algorithm. Helps get this into the eyes of more viewers. Great to have you all here. What a weekend live stream, Trey. Thanks for everything you do. Love the energy. Keep it up. I just want to give a shout out. My brother. Oh, you're not going to get me, Jordan. It's funny because when I was in high school, I used to write. I took this creative writing class, and that was actually the name of one of the characters in one of my books that I wrote for that class. So out of luck there. I fail says, hey, Trey, I sent a super chat yesterday at the checkout, but I don't know if I missed it. Can you check Premier African Minerals, please? Ticker PREM. So I'll check it out really quick, but this is going to be not necessarily a good live stream for super chats. I'm going to be honest with you. I likely won't get to as many of these because we are going to take really, really deep digs into the research. So don't feel like you have to drop a super chat. It's going to be better if we just have a conversation. You can simply just drop stuff in the chat bar. We can read it off, have conversations about it. I don't want you guys wasting your money. So I'm just going to throw this in the description box really quick. Don't feel like you need to drop a super chat, as I likely won't get to as many of them today. It will be a pretty deep dive into a very select few companies and research. So that's good to go. Cowabunga it is. All right, so we're gonna start off here with the shareholders meeting proxy. So this is basically the issuing of the proxy statement, right? So this is everything that we need to know about that shareholders meeting. Good to have you all here. Hope you're all cooking with Crisco. Let's just get right into it. So we're gonna start off with this. We're gonna scroll down and we have the basically index right here telling us everything that we need to know. General information, voting at the annual meeting, the proxy and voting. Let's see what we want to start off with. Amendments to the certificate of incorporation is proposal 1. So we're gonna start off with proposal 1 and see what we got cooking here. So this is an amendment to that 500 million shares common stock. I want to read through why the company wants to issue that 500 million shares of common stock, as I do think that's likely the thing that has the most people kind of stumped. So, if you're curious about how votes are counted, man, my throat is always doing this goofy stuff when I start talking in the morning. Don't yell at me. I know I should drink water, but I am going to pop down an energy drink. I haven't had one of these literally all week long, so I'm going to pop one down. It's a little reward for the long week that we had of AMC price action. So we're going to start off with this and just get reading. So how are the votes counted? This is regarding how votes are counted regarding that shareholders meeting. So a quorum is required to transact business at our annual meeting. Stockholders of record holding shares of common stock constituting a majority of the shares issued and outstanding entitled to the vote at the annual meeting shall constitute a quorum. So what is a quorum? That is probably a good thing to start off with here, just in case we don't know what a quorum is. Maybe this is rudimentary. If this is something that you don't necessarily feel like you need to know, I apologize. However, there are other people out there who are really new basic investors. So we're going to start off here and just look up what a quorum is. In case you're not familiar, it is the minimum number of members of an assembly or society that must be present at any of its meetings to make the proceedings of that meeting valid. So that is what a quorum is talking about. It's just the minimum number of people that need to vote, essentially. So if you have returned valid proxy instructions or attend the meeting in person, your shares will be counted for the purpose of determining whether there is a quorum, even if you abstain from voting or on some or all matters introduced at the meeting. So that's what we're looking at right here. I'm going to scroll back down. Directors of the company. This is just all the directors of the company. We won't dig into this too much. We've got Mr. Ladder, Mr. Locke, and Mr. Sussman are Class 1 directors. So these are just basically the people in charge of that meeting. So proposal 1. This is talking about the 500 million share stock dilution. So what I'm looking for here is information is why they want to do this 500 million share dilution, because that scares a crap ton of people. I'm going to be honest with you. Before I dug into it and did a little bit of thinking about it, what would I do if I was a CEO? Why would I want to do this? It scared me. I was like, man, this doesn't make any sense. Why would a company try to dilute the shares if they're trying to raise capital? I mean, it's typically when you double the overall shares outstanding, that just shows weakness. I mean, if you're trying to raise capital by diluting your shares and raising money in the short term, that just shows that there's not a lot of strength in a company long term. So I was like, all right, there's got to be more reasoning behind this, and we're going to try and find out what that is. So this is the proposal. In case you're just tuning in, we'll give you a brief rundown. They're voting to raise the total shares outstanding to 1.02 billion shares of common stock through a 500 million share dilution, essentially. Background and reason for the recommendation. So this is going to be a big piece of it, and we definitely want to know the reason why. So on January 27, 2021, the board approved a proposal to amend our certificate of incorporation to increase the total number of shares of common stock. The company shall have the authority to issue 500 million shares to a total of 1.02 billion shares of common stock, Class A. These are what are available to the general public. As of the close of business on March 3rd, the latest practicable date before the filing of this proxy statement, there were 450 million shares of our common stock issued and outstanding, and 10.9 million shares of common stock reserved for issuance under the EIP. That 10.9 million shares, essentially what that's talking about is it's that equity incentive program that's not available to the general public. I would assume that this is what is reserved for the board of directors, any sort of management, corporate employees, right? That's that incentive program. So that's just not available for trading. Right, so if you're looking at that 450 million shares here, and then 10.9 million that are not available to the public. Accordingly, 63.09 million shares, including the 3.7 million treasury shares of the total number of shares of common stock currently authorized, remain available for issuance or may be reserved for issuance prior to any amendment to increase the authorized shares of common stock. I don't mind that they're actually holding on to these shares, by the way. That's 63 million right here, and 3.7 million treasury shares that are currently authorized remain available for issuance or may be reserved. That means that they're not currently available to the public, and that's not a bad thing. So what that's essentially saying is, hey, we're cutting off the supply, which should actually inherently increase the demand. So they're basically holding on to that for a worst case scenario where they need to issue that stock, and I don't mind that in the least bit. So stock currently authorized remain available, yada, yada, yada. As a result of the retirement of our Class B common stock. Now, what is Class B common stock? This was essentially what was reserved for big institutional investors or insider trading. This is what happened with Wanda. So Wanda actually converted their Class B stock up to Class A stock. So they got rid of that. They retired their Class B common stock, meaning that the company is only trading Class A common stock. Now, if you're not familiar with what Class B stock is, we're just going to pull this up for you so that you can see exactly what it is. Class B shares are a classification of common stock that may be accompanied by more or fewer voting rights than Class A shares. Class B shares may also have lower repayment priority in the event of a bankruptcy, except for in the case of AMC. So usually this is what you're looking at. Class A shares would be superior to the Class B shares. However, Class A shares are all that are available for trading with AMC right now. So Wanda ended up converting. Wanda did end up having those higher voting rights. So it seems that it was a little bit backwards for AMC here in this situation. So retired Class B common stock, they're only playing with that Class A common stock at this point. Pursuant to a certificate of retirement, yada, yada, yada. Our certificate of incorporation currently authorizes the issuance of up to 574 million shares of capital stock, consisting of 524 million shares of common stock and 50 million shares of preferred stock. Now, what is preferred stock? I keep doing that. I keep coming back to Webull. Webull, preferred stock, for anybody who doesn't know, right? We'll pull this up for you so that we can just dig into it. Preferred stock is stock that entitles the holder to a fixed dividend whose payment takes priority over that of common stock dividends. So essentially, this is given to preferred members. It's not available to the general public. The preferred stock is what is available to a few select insiders, whether that be management, whether that be institutional investors, insider investors. That's what you're looking at right here. How are we voting, Trace? Is Patrick Diggins. We're digging through it right now. So I'm not going to tell you guys how to vote. I don't want to collude in the least bit. I don't want to sway your guys' opinions. I'll tell you what I plan on doing, and then you guys can decide what you want to do based on that. So we're just digging through the proxy, talking about the 6 different proposals they have for voting on the stock. So that's what you're looking at right here. We just dug through this little paragraph, and I think that proposal 1 is what has the most people's attention. So we're just digging into this with as much detail as we can. The board believes it is in the best interest of the company to increase the number of authorized shares of our capital stock in order to give the company greater flexibility in considering and planning for future general corporate needs, including but not limited to the offer and sale of common stock in 1 or more public offerings or private placements, the grant of common stock or warrants, options, or other convertible securities in 1 or more strategic transactions, stock dividends, grants under equity compensation plans, stock splits, and other general corporate transactions. The board believes that additional authorized shares of capital stock will enable the company to take timely advantage of market conditions and favorable financing and other opportunities that may become available to the company. The authorized but unissued shares, this is important. Authorized but unissued means they reserve the right, not the obligation, to issue these if they get approved, will only be issued at the direction of the board and if required by applicable law or regulation of the New York Stock Exchange upon separate stockholder approval. So what I'm pulling from this right now is the main body right here. Why would they want to do this? For future general corporate needs. Now, this is very, very, very broad. Now, this could be a variety of things, right? Let's say that they need to raise capital so that they're sitting on cash, right? cash to continue operations, cash to be able to rebrand the company. There's a variety of different ways that can play out, and that could dive into the possibility of a company acquisition. The only thing that I don't necessarily like is that they haven't stated that they are looking to rebrand the company or find alternative means for company growth, like some sort of hint at the fact that they may be doing a company acquisition. But the argument to that would be, if you are in a contract or under a conversation to be a company that is getting acquired, they're not allowed to talk about the details, right? So it's pretty vague. It's a very, very vague description. That's some basic mumbo jumbo legal talk right here, in which you don't get a big picture, right? But this is the biggest piece. Future general corporate needs, including but not limited to the offer and sale of common stock. Public offerings is a way for them to raise capital. It does end up diluting a little bit. That is where that LLC comes into play, that proposal 3. If I remember correctly, I think it was proposal 3 talking about the Ernst & Young LLP. They would be playing with those direct offerings. They'd be basically the middleman that would make that sort of stuff happen. So coming back down to proposal 1. All right. So that was the big piece right there. Next, you've got the grant of common stock or warrants. So that would be like the EIP, the Equity Incentive Program. Options or other convertible securities. So this would allow them to have the collateral for exercising options for, let's say, market makers, clearing houses, if they don't actually physically have the collateral, as I imagine that's what's going on right now. Stock dividends. So that would be able to reinvest that stock dividend plan, because AMC actually did used to have a dividend. They're a very old company. They've been around for over 100 years. That's what you're looking at right here with AMC. Grants under equity compensation plans, stock splits. We don't like stock splits. That's not something that I'm personally a fan of, unless it would be a reverse split, in which case you would actually decrease the overall shares outstanding. Let's say that you did a 3-to-1 reverse split. That would turn 3 shares into 1 share. Your 3 shares worth $13.90 a piece would then become 1 share worth $14.28. 42, so it'd be worth like $41.70. So that'd be a reverse split. I wouldn't mind that in the least bit, but that's usually talking about an actual regular split, which would be maybe like 3-to-1, where you would turn 1 share into 3 shares. I'm not for that. I don't want to make that happen, but that's an opportunity they would reserve if you ended up voting yes on this piece of things. And then other general corporate transactions. So that's what you're looking at right here. The board believes that additional authorized shares, we've already read through that. So right of additional authorized shares. Any newly authorized shares of common stock will be identical to the shares of common stock now authorized and outstanding. The certificate of amendment will not affect the rights of current holders of common stock, none of whom have preemptive or similar rights to acquire the newly authorized shares. So it will not affect the rights of current holders of common stock. So that's us. That's the average retail investor. That is the ape out there in the community who is holding common stock. It would not affect us, apparently, as they are stating, none of whom have preemptive or similar rights to acquire the newly authorized shares. Potential adverse effects of the certificate of amendment. So this is downsides, right? They're basically giving you the bear case, why you may not want to make that happen, from my understanding. Let's read this. Adoption of the certificate of amendment will have no immediate dilutive effect on the proportionate voting power or other rights of the company's existing stockholders. However, any future issuance of additional authorized shares of our common stock at the future direction of the board, and generally without the requirement of stockholder approval unless specifically required by applicable law or New York Stock Exchange regulation, may, among other things, dilute the earnings per share of common stock and the equity and voting rights of those holding common stock at the time such additional shares are issued. So essentially what they're saying is the adverse effect here is dilution, right? If you were a major stakeholder and they issue another 500 million shares of stock, and let's say that you're a 10% holder, well, now there's another 500 million shares out there. You're no longer a 10% holder. You'd have to buy more common stock in order to make that happen, right? So that's a downside here. It also is saying that the worth per share would go down, and that's basic supply and demand, right? So if there's an increase in supply, there's a decrease in demand, making each of your shares worth less money than they were before. In addition to the general corporate purposes mentioned above, and as further described below, an increase in the number of authorized shares of common stock may make it more difficult to, or discourage an attempt to, obtain control of the company by means of a takeover bid that the board determines is not in the best interest of the company and its stockholders. However, the board does not intend or view the proposed increase in the number of authorized shares of common stock as an anti-takeover measure, and is not aware of any attempt or plan to obtain control of the company. That's actually pretty interesting. So my hypothesis was that they may issue 500 million shares of common stock for a takeover, for an acquisition purpose, that you could have a company purchase 500 million shares, and they're saying that it actually may decrease the chance of that happening. Not in the best interest of the company and stockholders. However, the board does not intend or view the proposed increase in the number of authorized shares of common stock as an anti-takeover measure. So essentially what they're saying is it would make it more difficult to take over a company, but that it's not an anti-takeover measure, and they're not aware of any attempt or plan to obtain control of the company. So this right here is saying that they actually don't know or of any companies that may be trying to acquire or take over AMC. That's fascinating. That's fascinating because that would debunk a lot of the hypotheses that are circulating right now regarding an AMC Amazon acquisition or an AMC Netflix acquisition, because that's stated right here in plain ape language on their proxy statement, which is interesting. So potential anti-takeover effects. Let's read through this before we end up making a conclusion. I'll tell you what my conclusion is on this proposal, what they are stating as the reason for the proposal, and I'll tell you what my personal vote would be based on the information that was presented to me. The certificate of amendment could adversely affect the ability of third parties to effect a takeover or a change in control by, for example, permitting issuances that would dilute the ownership of a person seeking to effect a change in the composition of our board or contemplating a tender offer or other transaction that the board determines is not in our best interest or in the best interest of our stockholders. The board's ability to issue substantial amounts of common stock, generally without the need for stockholder approval, except as may be required by law or New York Stock Exchange, upon such terms and conditions as our board may determine, may, among other things, be used to create voting impediments with respect to a change in control or to dilute the stock ownership of stockholders seeking to obtain control of the company. The issuance of common stock, while providing desirable flexibility in connection with potential financings and other corporate transactions, may have the effect of discouraging, delaying, or preventing a change in control of the company. Our board, however, does not intend or view the certificate of amendment as an anti-takeover measure, nor does it contemplate its use in this manner at any time in the foreseeable future, and is not aware of any attempt or plan to obtain control of the company. I'm going to read this twice. A board, however, does not intend or view the certificate of amendment as an anti-takeover measure, nor does it contemplate its use in this manner at any time in the foreseeable future, and is not aware of any attempt or plan to obtain control of the company. So that basically doubles down on exactly what they said up here. Is this 500 million share dilution is not an attempt to decrease the chance of a company takeover or a company acquisition, but they don't contemplate its use in this manner either. They're not diluting the shares. They're not trying to take that 500 million shares to have a company acquisition based on what they're stating right here in that ape language breakdown. So personally, with what I've just read right here, we'll read off the last little pieces of this. Appraisal rights pursuant to the Delaware, not really that important. I personally would vote no. I would vote no. So if their reasoning for this is just to be able to issue more common stock, to be able to issue common stock for direct offerings, to be able to use this for the equity incentive program, right? If it's not in the best interest of the company to use this for the reasons of a company acquisition or a company takeover, right? That's a no for me, man. That's a big no for me. But you guys make your own decisions, right? That's what I was looking for in reading this. And this is the first time I've read it, right? So we can have a conversation about this if you guys have a reason why you would believe the answer should be yes. But myself, I'm going to be voting no because that's what I was looking for. With that 500 million share dilution, I only would be looking for the opportunity for a company to take a major stake in AMC that they couldn't otherwise do without that 500 million share dilution, because the majority of AMC is holding the stock, right? So it's mostly being held. And they stated pretty much in plain language right here that that's not the purpose of that 500 million share dilution. The board does not intend or view the proposed increase in the number of authorized shares of common stock as an anti-takeover measure and is not aware of any attempt or plan to obtain control of the company. So they've already stated it. That's a no from me, son. I've got no interest in that. I'm going to be voting no to that 500 million share dilution. I don't think it's necessary. And honestly, guys, I think that AMC is underestimating how much their company is going to increase in value simply from shareholder buying. There's so many stockholders out there, and there's so many people that are simply buying AMC. That's going to increase the company's market capitalization, right? It's the market cap. Now, how does market cap work, right? If you want a really good video on market cap, or you want to understand the deep dives of the market, dude, watch the Wolf of Wall Street's podcast. He is a freaking animal. I sat down for about an hour yesterday and watched Wolf of Wall Street's one of the Wolf of Wall Street's podcasts, and the dude walks you through in simple language the ins and outs and the understanding of the market. So market cap is the value of a company that is traded on the stock market, calculated by multiplying the total number of shares by the present share price. So this is how much the company's worth, right? And I know there's a lot of you out there who know what that is, but there might be people who don't, which is why I'm walking you through it, right? So that's basically what the company is worth. It's what the company is trading at on the stock market, calculated by multiplying the total number of shares by the present share price. So if there are 450 million shares, right, and AMC is trading at $13.93, you multiply both of those together, and that's tell you what the company is worth, right? So if you take those numbers And let's say that the stock price is trading at $20 or $25 or $30, right? That would end up increasing the worth of the company. And they can take that opportunity, how much the company's worth, to raise capital. They could do things such as a share buyback, right? If they bought back shares from the general public, I don't know how many people would sell it, but maybe there'd be a few people. And they could raise money simply from that alone, which would actually decrease the dilution rate. It would decrease the available amount of shares for trading. By decreasing that supply, they would increase the demand. So I think they're undermining that. I don't think they realize how many apes out there are actually trying to help out that company. So I'm voting no. That's a no for me, guys. That was a long-winded explanation on what I think about that first proposal. But hopefully that gave you a little bit of clarification. I will be clipping out this piece of this research podcast so that we can have that out available for the public as well. That is simply my opinion. You guys can have your own opinions. You don't have to do what I do. I'm voting no. You guys can do whatever you want. So I'm just going to come over here and I'm going to click no on my personal proxy vote for that. So take that for what it is. That's just my personal opinion. So next we're going to look at proposal 2. We'll give you guys a quick breather. I'm going to drink some of this energy drink. I keep trying to come back to it and put some down, but that's totally all right. This is why institutional investors have been buying shares to outvote us. There you go, man. All right. Trey. Adam Aaron, CEO, gave both his sons 250K shares each. That's a good sign, man. I mean, insiders continuing to buy and continuing to hold, at the very least, hodl on their shares of the company shows that there's good things happening. Think about it like this. Think about it from an outside perspective. If you have insider management that is not continuing to purchase shares of a company, right? Let's say that they're selling off all their shares and they're not buying anything. And that's happened for 1 year, 2 years, 3 years, whatever it may be. That's not a sign of confidence. That's not a vote of confidence. Because those guys are the board of directors. They see the meat and potatoes, the deep guts of a company. And if you've got, the board of directors, the management team, the CEO, the COO, whoever it may be, selling their shares, that tells you that they don't have any confidence in the least bit on the company continuing to grow in the long term. So what this tells me, the fact that they're continuing to buy shares, they still have this equity incentive program. They're not selling their shares, the majority anyways, is that they believe that the company's actually going to have long-term potential. They get to see the deep down guts of a company. They know what the plan for growth is for the company. They know exactly what they're trying to do to rebrand the company, to be able to raise revenue for the company, to get more profit for the company, right? So that's a vote of confidence for me. I dig seeing that. That's why I was excited to see the insiders were still issuing both stock and derivatives, which would be options, to their board of directors and to their management, because that's a good thing. So there we go. Coming into proposal 2. At the annual meeting, stockholders will vote to elect 3 individuals to be elected as Class 1 directors to hold a 3-year term of office from the date of their election until the company's 2024 annual meeting and until their successors are duly elected and qualified. If you guys wanted me to read through this, let me know in the comment section, in the chat bar. We will continue to read through proposal 2, but honestly, this is not as interesting to me. Not that I'm not interested in the management side of things for the directors, the board of directors, but I think there are more pressing matters that we can discuss in this huge proposal, as there's a lot of information that we need to dig through. So if you want us to cover this, let me know. We will. I'll just give you guys a couple seconds to let that go through, because I know there's like a 30-second delay on YouTube. So I gotta read through some of these super chats in the meantime. My baby boy is born today. John, dude, there you go. 8 pounds, 2 ounces, 10 fingers, 10 toes, and 2 diamond hands. Dude, drop some gorillas in the chat for John Fields. Happy freaking, I'm glad for you, man. Your baby boy. I don't know what you named the guy, but I'm sure he's gonna have a great, dude, I think it was, you just stated, no, maybe it was somebody else. That was Wall Street Assassin, but that's awesome. I hope that he's healthy. I hope that he's happy. I know that you're going to take great care of him. You're going to be a great father. I'm very excited for you. Annister, thank you. Appreciate that. What are we voting on for this AMC thing, or did you already go over this? I just got on the stream. I'm personally voting no for proposal 1, but I don't want to sway you one way or the other. Skip it. No. We'll skip it then. We'll go to proposal 3. Thank you, guys. So, corporate governance, business conduct, and ethics. I want to find proposal 3. Director compensation. So this is just talking about how much they're getting paid. This, if you want to know how much people are getting paid in cash, there you go. Lloyd Hill making $97,500. You've got $157,000 for Howard. Not that important. I'd like to find proposal 3. Certain relationships and related transactions. Here we go. Proposal 3. Ratification of the appointment of an independent registered public accounting firm. So this is talking about Ernst & Young LLP. This is the company that would be representing them for direct offerings. This has some significance. I wouldn't say as much significance as Proposal 1, which is the issuance of 500 million shares of common stock, the Class A common stock. All right. So I'll read the first little paragraph here. If I feel like there's more that we need to cover here, we will do so. The audit committee has selected Ernst & Young LLP as the independent registered public accounting firm to perform the audit of our consolidated financial statements and our internal control over financial reporting for 2021. EY served as our independent registered public accounting firm for 2020. So these guys have already been working with Ernst & Young, which they call EY in quotations here on their little piece. Looks like they're an auditing committee. They would handle registered public accounting. They would handle the auditing. They would handle their financial statements. So all that sort of stuff. I would say personally that's not that important either. But we'll read this next paragraph just to make sure we're not missing anything. The audit committee is responsible for overseeing the qualifications, engagement, compensation, independence, and performance of the independent registered public accounting firm retained to audit the company's consolidated financial statements and its internal control over financial reporting. The audit committee requires and, with its chairperson, oversees the selection process for new lead audit engagement and concurring partners every 5 years. Throughout this process, the audit committee and management will provide input to EY about AMC priorities, discuss candidate qualifications, and interview potential candidates put forth by the firm. The audit committee will also require other key Ernst & Young partners assigned to our audit to be rotated as required by the PCAOB to help ensure continuing auditor independence. The auditor committee will continue to periodically consider whether there should be a regular rotation of the independent auditor. I don't know what PCAOB means. I'm going to look this up. When I don't know something, I'm going to admit it to you guys. PCAOB, acronym. I'm going to find out. Let's see. Public Company Accounting Oversight Board. So now I know. Public Company Accounting Oversight Board. Public Company Accounting Oversight Board. Public Company Accounting Oversight Board. You tell yourself something 3 times. It's a little easier to remember. So that's what PCAOB stands for. If you didn't know, you learn something new every day. Personally, I don't think this is that interesting. I don't think we really need to know. So I'm going to keep reading on. I see some people here in the chat bar saying, please read on. So we will continue to move forward to the next piece of things. So, proposal 4 is what we're going to come up to next. Thank you everybody that's tuned in right now. I appreciate everybody immensely. If you don't mind dropping a like on the video, that does help out the algorithm a little bit. We will be posting the meat and potatoes of this. I will be clipping it out later so that we can give that to anybody who was not able to tune in for the live stream. And if you want to just find the piece specifically on where we talk about specific things. So, coming down here to proposal 4. Rolls-Royce, already talked about it. No, I have not, my friend. We're starting off here with the AMC Shareholders Vote, as I think there was a lot of confusion out there, and I am going to be able to clip out the specific pieces of this that I think people are looking for an answer on, which is specifically Proposal 1, that 500 million share dilution. So, are they able to do the recount without the dilution? They are. Yes, entirely should be able to do that recount without the dilution. Yes, sir. All right. Coming back down. Proposal 4. Man, a lot of meat and potato numbers. All right. Non-binding advisory vote to approve compensation of named executive officers. So we'll read the first little piece of this, and my take, I haven't read through this yet, but this is the first time that I've seen the article. We're doing some research together, my friends, which is saving us all some time, huh? Saving us some time. This is my thoughts are, this is just giving incentive and compensation to the executive officers, the board of directors, the management of AMC. I would personally vote yes. I'm going to tell you if I change my mind. By the way, proposals 2 and 3, I'll vote yes to. You guys do whatever you want, but I have no problem in the least bit with the continuation of Ernst & Young LLP being the offering firm, the accounting firm who takes charge of the financial statements and the direct offerings of AMC. I've got no problem with that in the least bit. So my answer to the previous 2 and 3 proposals is yes. You guys do whatever you want to do. Don't do what I do. Do your own DD, do your own research, but this is just my personal opinion. So as we discussed in the compensation discussion and analysis above, the company's compensation program for executive officers is designed to attract and retain high-quality people and to motivate them to achieve both our long-term and short-term goals. I like that a lot, and that is exactly what I've been saying. I do not mind compensating your directors accordingly, right? If you pay people well, they're going to be incentivized to want to do good things for a company, which is why I wasn't mad. I mean, I know a lot of people out there were pissed. They were like, why are this company's going to go bankrupt? Why are they giving out bonuses to the board of directors? I don't get it. But I don't mind that because it incentivizes them, right? People need incentive, whether it be financial, whether it be objective, subjective, emotional, whatever you have to do, right? People need incentive to be able to work hard for something. Like if I simply, like for me, for running, right? For running, what was my incentive to be a good runner? I wanted to qualify for the Olympic trials, and I wanted to make my old man proud. Without that incentive, I wouldn't have gone to Length's End for 10 years to run 100 miles a week over week with no days off for months at a time, right? To be a good runner. That was my incentive. I needed something to chase. I I needed a goal to keep in the back of my mind. For the board of directors here, it's the same thing. Their incentive is to get compensated accordingly. If you pay someone like piss, they're going to perform like piss. You pay somebody like gold, they're going to perform like gold. So that's what I'm looking at right here. Anyways, as required by Section 40 of the Exchange Act, this proposal, commonly referred to as the Say on Pay resolution, seeks a stockholder advisory vote on the compensation of our named executive officers as disclosed pursuant to Item 402 of Regulation SK through the following resolution. Resolved that the company stockholders approve on an advisory basis the compensation paid to the company's named executive officers as disclosed in the company's proxy statement for the 2021 annual meeting of stockholders pursuant to Item 402 of Regulation SK, including compensation discussion and analysis, compensation tables, and narratives. This vote is advisory and non-binding, so it means that it's the right, not the obligation. Right? By voting yes, that doesn't necessarily mean it'll happen. It won't be executed. It is just going to give the opportunity. So this vote is advisory and non-binding, but our board and the compensation committee will consider stockholders' concerns and evaluate whether actions are necessary to address these concerns. The board recommends a vote for approval, obviously, otherwise they wouldn't they wouldn't have this proposal in this proxy, but of the compensation of our named executive officers as disclosed in the proxy statement on our advisory basis. So personally, I'm going to vote yes to this. I have no issue in the least bit with compensation of their executive officers, their board of directors, or their management. I do think that'll be a good thing. I think that'll treat them well. So I'm going to be voting yes to that. You guys do whatever you would like to do. But this is my personal opinion, right? I am totally for it. I'm going to vote yes. I'm going to vote for that compensation. So moving on to the next piece, we'll come up to Proposal 5, which is the fifth out of 6 of these proposals that is on this proxy that you guys have the opportunity to vote on. By the way, if you do want to vote on them, you can vote on them today, or you can wait until that May 4th shareholders or stockholders meeting, in which case you get to decide, on that date as well. But I'm just going to vote right away. That way it's out of the way, and you guys do whatever you'd like to do. I didn't get an email, but I own shares. Tiffany, I've heard that from a couple of people. Are you holding shares on Robinhood? Because I've heard from a couple of people that that Robinhood shareholders haven't received a email from everything. So that's very, very interesting. So, Proposal 5, an approval of an amendment to the company's 2013 Equity Incentive Plan, the EIP. We are submitting for stockholder approval to an amendment to the EIP to 1, increase the number of shares available for awards under the EIP by 20 million shares to 35 million. 2, revise the EIPs, and this is actually a really important proposal. I think this is worth talking about. 2, revise the EIP's share replenishment provision to comply with New York Stock Exchange rules by eliminating the ability to reuse shares that have been previously issued and returns to the company as payment for the exercise price of stock options or payment of taxes. And 3, eliminate the mandatory expiration date for the EIP, which is no longer necessary under existing tax regulations in New York Stock Exchange rules. The increase in the number of shares is needed in order to continue to provide a meaningful long-term incentive for management and as a result of recent significant declines in the company's stock price. The text of the EIP, the Equity Incentive Program Amendment, is set forth in Appendix B, and this description of the proposed amendment to the EIP is qualified by the full text of the EIP amendment. So the first piece, I'll talk about each of these 1, 2, 3, what I think of them. This is just my personal opinion. I'm not a financial advisor. Number 1, increase the number of shares available for awards under the EIP by 20 million shares to 35 million. I don't mind that at all. I don't mind them increasing the number of shares. And if you say no, you're not for that first proposal, increasing to 500 million, that's not going to dilute the stock. What that's going to do is actually decrease supply because there's going to be more shares that are held by insiders, boards of directors, right? Management, board of whatever it may be. That'll be less shares available to the public. So by increasing from 20 million to 35 million, that helps the cause. Cut off supply, increase demand. I'm all for that, right? That's that number 1. Go ahead, right? That's totally cool. Number 2, revise the EIP's share replenishment provision to comply with New York Stock Exchange rules by eliminating, this is the piece, eliminating the ability to reuse shares that have been previously issued and returned to the company as payment for the exercise price of stock options or payment of taxes. So they don't want people, they want to eliminate the ability to reuse shares. So being able to retire shares, that would actually take them off the market. I don't mind that in the least bit. I think that's totally fine. Number 2 is got my vote. Number 3 is eliminate the mandatory expiration date. So essentially extend the ability for this equity incentive program, which is dated back to 2013. And I'm also for that as well. In the simplest of terms, all 3 of those are a go for me. You guys do whatever you'd like to do. I'm going to vote yes. I'm going to vote for Proposal 5. So far out of the 5 proposals, I am only voting not for on the first one, which is that 500 million share dilution. I'm for the next 4 after that. That is 100% totally okay. So coming up into the final proposal, which is proposal 6, that is the adjournment of annual meeting. So if at the annual meeting, the number of shares of common stock present or represented and voting in favor of the proposals is insufficient to approve the proposals, our management may move to adjourn the annual meeting to a later date or dates, if necessary or appropriate, in order to enable our board to solicit additional proxies in favor of the proposals. In that event, you will be asked to vote only upon the adjournment, postponement, or continuation proposal and not on any other proposals. So what this is saying is if they don't come to a common agreement on any of these 6 proposals, that they reserve the right, not the obligation, to push it to the right and vote on that specific proposal out of the proxy on a later date. So that's this personal piece right here. Personally, I have no issue with that, and they made it pretty clear in ape language, baby, that this is not going to be for every single proposal. So if they don't get what they want on one of these proposals, they're not going to make you vote on all 6 again, right? That's what I'm gathering from this, and I don't mind voting for on this either. We'll continue to read through this just to see if there's any last things we need. In this proposal, we are asking you to authorize the holder of any proxy solicited by our board to vote in favor of adjourning, postponing, or continuing the annual meeting and any later adjournments. If our stockholders approve the adjournment, postponement, or continuation proposal, we could adjourn, postpone, or continue the annual meeting and any adjourned session of the annual meeting to use the additional time to solicit additional proxies in favor of the proposals, including the solicitation of proxies from stockholders that have previously voted against the proposals. Among other things, approval of the adjournment, postponement, yada, yada, yada. Even if proxies representing a sufficient number of votes against the proposals have been received, we could adjourn, postpone, or continue the annual meeting without a vote on the proposals and seek to convince the holders of those shares to change their votes to votes in favor of the approval of the proposals. So I don't, Seek to convince the holders of those shares to change their votes to votes in favor. Interesting. Now, I don't know. It looks like if they don't get what they want, they would be trying to push it to the right so they can reconvince people. I'm not necessarily against that. I think if they can present new information that would change the minds, or if they can better explain why they would want to do a certain thing. Specifically, everything is really clear to me, right? The only thing that I'm not for is one, like the proposal 1, I don't know about that. I just don't see the reasoning behind it. They were really vague. I feel like they were using some legal jargon, trying to confuse people, trying to give really vague descriptions of why they want to raise that 500 million shares, and I want an exact reason. And for me, I think what this is saying is if we get if people vote no to proposal 1, we reserve the right to hold another meeting down the road to try and change your guys' minds about why we want to dilute the overall shares by 500 million. Now, I don't necessarily think that's a bad thing in and of itself. I think it just gives a second opportunity for them to explain themselves. But this one's a little wishy-washy. I can see it having some different opinions depending on the person here. My personal thoughts on Proposal 6. If they wanted to push it to the right, they want to convince people of why they want to dilute shares, right? Let's just use Proposal 1 because I think that's going to be the most heated and have the most controversy. If they wanted to explain in better English, right, why they want to dilute, I would be for that. I'd be okay with if, like, let's say, for example, we have a second meeting, they have a second proxy that gives out more information on, that proposal 1. They could say, hey, based on what we just gave you, I understand that we had a lot of no's. Here's some more detail on why we want to do that 500 million share dilution. That would be the only situation in which I would be okay with Proposal 6 voting yes on that. However, voting no on Proposal 6 would give them no opportunity to be able to make a second decision on a further date of adjournment, right? So that they can make more decisions and try to reconvince people to change their votes. So this is a wishy-washy one. I don't know what you guys are deciding here. I don't know what your personal opinion would be. I think this is going to be another controversial one, that Proposal 6. So personally, I'm going to vote yes to 2, 3, 4, 5. I'm going to vote no to Proposal 1, which is that 500 million share dilution. That's just my personal opinion. You guys do whatever you want to do. Proposal 6, personally, I'm going to also vote yes. And that is only because I feel like if they have a second adjournment where they can have more opportunity to reword their proxy, reword what they want to get across with that 500 million share dilution, and if there's an opportunity for them to, like, let's say they talk about a company acquisition, but they made it pretty clear that, you know what, gosh, this is tricky. This Proposal 6 is tricky, man. I don't know. I'm seeing some mixed opinions here. Some people are saying vote no to 6. I've seen some people say vote yes to 6, but most people are saying vote no. So it's your guys' personal opinion. The only thing I don't like about Proposal 1, right? So what they're saying is they want to give a second opportunity for people to change their minds about proposals if they don't get voted for. They want voted for all of these. That's the recommended vote, obviously. Otherwise, they wouldn't have recommended these proposals. But the only thing that trips me up with proposal 1 is they stated pretty clearly that this issuing of more common stock, the Class A common stock, is not for the purpose of a potential takeover, right? The potential anti-takeover effects. In fact, they said that it would decrease the chances of a potential takeover. So they've already made that clear, and that was the reason why I wanted to see a 500 million share dilution if they were going to do it. So I personally think I'm actually going to vote no. You know, now that I think about it again, I just don't see any potential. I don't see any rhyme or reason why they should dilute. I think it's a short-term Band-Aid solution to a long-term problem, and it's just not the right move. I think they're going to be able to raise a lot of capital. I mean, if the stock price goes up from $13.90 to $20 or $25 or $30, that is going to double the market capitalization of the company. They can raise money from that. I mean, they raised money when it was up to $20 or maybe $18, $16. They raised almost $1 billion. It was like $700 million from that alone, right? That's just one opportunity. And I don't think that they're going to lose the opportunity to do that down the road. I think, in fact, it is going to continue to present itself as an opportunity as we've had this nice, healthy growth from $5 all the way up to $13.59. I think that's going to continue. I think they're going to continue to have this really nice, healthy growth over the next couple of weeks, and they can raise more capitalization. They can raise more equity so they can continue to fund their operations and maybe rebrand, maybe get some, virtual reality, augmented reality, maybe get streaming services, whatever they want to do, right? So I'm personally going to vote no to this. So I'm going to vote no to proposal 1, proposal 6, 2, 3, 4, 5, all for it. Have no issues in the least bit with 2, 3, 4, 5. I am going to vote yes for that. I don't mind them incentivizing the company. I'm 100% okay with EY being their basically auditing company, their offering company, they're handling their transactions, right? That's totally okay with me. Their independent registered public accounting firm, that's okay with me. That's totally cool. But 1 and 6, that's my personal opinion. We ran through it. Those are just opinions, right? You guys make your own decisions. But that was the deep dive into this shareholders meeting. How do you vote, right? That is a question that's been asked. Well, I'm not going to show you guys my email, but I will say is you should have received an email from Webull or whatever your brokerage firm is. So I actually got an email from both my brokerages, Webull and my second brokerage account, and they both said you have the opportunity to vote. And I'm going to vote on both of those. So take that for what it is. I'm going to vote on both of those for all of my proposals, and then that is where your opportunity would be. So you can spread the word if you'd like to. I am going to clip out this piece of the live stream so that we can talk about that more down the road. But that's my breakdown of that shareholders vote. So hopefully that answers some questions for you guys. Now we're going to dig into some more of the other research that people wanted to dig into. I know that Rolls-Royce has been a very hot topic. Every single live stream, I think I get asked by like 10 people about Rolls-Royce. So we'll dig into that, and I'll clip that out so that people can do some DD on that, look at some different research. And you guys will see my process of how I research companies, what I look for specifically. And we can just walk it through step by step because everybody's got a different process. My process isn't the only way, but it's a way, right? So take that for what it is. Thanks everybody tuning in so far. If you guys wouldn't mind dropping a like on the video, does help support the channel. Yada, 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 yada. You know what it is. AMC is going to issue more shares. They're going to do it. They don't care about retail investors. I don't think that's necessarily the case, man. I think they do care about retail investors, and they've made that public. I mean, the CEO has given some hints. They've dropped some bombs saying, hey, we're paying attention to this right now, and we think that you guys are going to be very happy if you hold stock in AMC. So I feel okay about it. God says, I want to give you $1 million face punch for this vid. I'm not entirely sure what that means. Is that positive or negative? Couldn't tell you, man. All right, but anywho, gonna read through a couple of these super chats. Appreciate everybody that's tuned in. Don't feel like you guys need to drop a super chat. We are not going to have as much time to dig into those today as we are digging into more research-based stuff, not answering the quicker questions. So take that for what it is. All right. So coming back into this, we're going to look into Rolls-Royce now. So if this doesn't interest you, I appreciate you guys stopping in. You don't have to stick around. It's all good. It's all good. But we're going to dig into some more DD, do some more research, and the whole 9 yards. Hopefully that answered your questions. Excuse me. So, coming into Rolls-Royce. Now, what is Rolls-Royce? What do they do? Well, we're just going to pull up Rolls-Royce here, RYCEY, Rolls-Royce Holdings. This is an OTC market stock, so you can't trade this on... you can trade this on Webull, apparently. Most OTC market stocks you can't, but it looks like you can trade this, which is actually really interesting. Let me just double check, because HCMC, I know you can't. Yeah, wow. You can actually trade Rolls-Royce on Webull, which is very fascinating because most OTC market stocks you cannot trade on Webull, but apparently this one you can. So Rolls-Royce is actually tradable on Webull if you are interested. They are an industrial goods, and aerospace and defense company. So we're going to pull up their website here really quick. Show you basically what they are. Now, this is Rolls-Royce. They work specifically with electric planes, with jet engines, the whole 9 yards, all that sort of stuff. All electric plane, Spirit of Innovation, has successfully completed its taxiing. Another milestone on the way to becoming the world's fastest all-electric plane. So this would run off of no gasoline, which is actually very fascinating. And from what I understand, they actually recently got a contract with some more big-time jet engine contractors, which is interesting. So I want to dig into what this company does, why electrical. They've got propulsion here, air taxis, light sport and training aircraft, commuter aircraft, interesting, Excel. So let's read into why they're trying to get into electrical airplanes, because I think that an interesting piece of investing is to look into how is this going to move with the market, right? How is it going to compete with the rest of the market, right? If you're to look into, for instance, fossil fuel and oil. Right now, fossil fuel and oil is booming, right? It's a great short to mid-term investment. You're gonna make some great cash on that. But thinking long term, how is that going to sit? And it's good to think about, hey, where is this going to be a month from now, 6 months from now, a year from now, 5 years from now, 10 years from now? What is going to be the survivability of the company? And personally, I think that the future is electric, just like you're reading right here. That's why I like companies like Fuel Cell, Plug Power, Tesla, electric vehicles such as NIO, XPEV, Lee. Solo is actually pretty interesting. I used to talk about them a lot more on the channel. I think they've got a future as a commuting company, commuting car. But electric is huge, and I think this makes this company potential for a very long-term possibility. And if you look at them on their chart, right, they've existed for quite a while. So let's look at their max charting. They've been around since what appears to be about 2001. So they have been through the ringer. They've gone through some highs. They've gone through some lows. And as of recently, they haven't been doing very well. So I want to find out why they've been selling off so much. So if you look at their financials really quick, we're just going to dig into briefly their income statements, their annual income statements. So if you look at their annual income statements, 2017, 18, 19, 20, right? Total revenue has either been flatlined or has been decreasing. And beyond that, their gross profit has been negative. So in 2020, they actually lost money, even though they made $16.16 billion in total revenue. So it doesn't appear that they have great margins. In fact, their margins are really poor. They're pretty piss poor. I'm going to be honest with you. As of now, that doesn't mean that down the road they can't be good, but that's something that stands out to me in particular about Rolls-Royce is that they have $20 billion in revenue. However, they only pull home about $3.29 billion of that here, 1.5 here, 1.25 here, right? Their actual profits, their margins have been decreasing year over year over year, which would tell me that the way that they're handling their manufacturing is likely not very cost efficient. And I don't personally like to see that as a shareholder when I'm buying into a long-term company. I either am looking for growth potential, which I think is actually where this company has some real upside, is growth potential, their contracts, right? Not necessarily their previous growth. That'd be why they're trading for $1 right now. Trading at $1.69, they've been selling off. My anticipation is because their revenue has just not been good. They haven't been capitalizing on, their true revenue and pulling home real good margins. You'd be investing in them for potential for growth, which is why I'm in Microvision, right? Microvision, for example, is a company that doesn't have great income statements. Their income statements are not very good. I mean, you look at these annual income statements, 9.63 million, 17, 8, and 3. Year over year over year, if you look at their income statements, they go down. I mean, they've actually been losing money in total revenue. They're not making as much. Their profits also are not very good. I mean, they actually pulled home about 1.69 million in 2020, which isn't terrible. That was actually an increase from the previous year, but their total revenue went down. So their margins got better, but they're not making a lot of cash. Income statements, very rocky, not doing great, but that's not why we got into Microvision. We got into Microvision because how they're going to compete in the market down the road, not their previous growth. They're not a previous cash cow monster company, but the way that they're rebranding, going into automotive LiDAR compared to the technology they've utilized in the past is what captures my interest. The same thing I think could be said about Rolls-Royce. That's what I look into Rolls-Royce for, is not what have they done, because they actually make some really good revenue, but their margins, their profit is kind of bad. You're not looking at that. You're looking into how can they compete down the road. So that's what I'm digging into right here, is the future is electric. They're getting into electric planes. Clean, sustainable, safe, and silent. That's the promise of electric propulsion systems. It's a promise made real by the technological advancements that make the use of electric systems technically and economically feasible. So their propulsion system, if you want to dig into that, we can do so. We are championing electrification, developing, testing, and innovating technologies and systems together with partners to create the electric propulsion and energy systems of tomorrow. Dude, that is freaking insane. I mean, honestly, think about how crazy this is, that we're actually getting to a time where electric planes are a possibility. One thing that I actually want to look into, I saw that it just dropped in the chat bar, thank you for that, is the research and development costs. And the research and development costs are pretty fairly high. They drop about $911 million in 2020, which is good. I like to see that they are dropping that money on R&D, and they drop a pretty decent amount in marketing and administrative expenses as well. But that doesn't make up for the cost of revenue, which is $16.45 billion. I do like to see that they're spending a lot of money on R&D because that's important for a company that's working with technology, electric airplanes, which is freaking insane, to be honest with you. But I like to see that number go up, to be honest with you, because what this tells me, since their cost of revenue is so high, is that a lot of that is being spent on the manufacturing cost, which I'd like to see go down. It is possible to see down the road, but that's totally okay, right? You're not investing in this company for previous growth. You're doing it for innovation and for future competition in the market. I think they've actually got a real possibility of being competitive. So we're going to keep digging into this. Third era of aviation. We have over 100 years of expertise supporting our next challenge, making electrification not just a concept, but a reality. Hybrid electric drive systems allow aircraft to be powered by alternate fuels or electricity. So very interesting. Why are we championing electric flight? Air travel demand, environmental impact. The time is now. Efficiency, cost. So I want to look into cost. This is going to be huge. It costs less to maintain an electric aircraft through reduced fuel costs. Hybrid electric propulsion systems carry the potential to reduce fuel burn and operating costs. This makes it less costly to train pilots. So that's good. I mean, you look at their cost of revenue being $16.45 billion. They lost money in 2020. That would decrease their cost of revenue, which is going to increase their total margins. I like seeing that. That's a good thing to pay attention to. Extended operating hours, they'd be able to drive for longer by the look of it. Reduced noise will allow aircraft operations to be extended beyond the current limits, so they'd be able to transport more. It depends on what they're using these for, whether it's for commercial use, whether it's for export use, if it's retail airplanes. There's a bunch of different ways they can play this out, but regardless, they'd be able to make more cash because they're able to have extended operating hours, which is good. Reshaping air travel. More silent and economically efficient airplanes will allow new commuter concepts to offer transport services beyond the traditional flight routes. This has the potential to reinvigorate small regional airports and to make flight transport more accessible to large parts of society. So that's also pretty fascinating. That's what we're looking at right here. Air travel demand. Air travel demand is rising, stretching the limits of airports and our environment. And I would say really more so in the next 6 months to 12 months than ever before, which is absolutely huge, right? COVID and quarantine really shut down, companies like this. I mean, if you look at the chart setup here over the last year, right? Let's just take a peeky weeky, as you guys always say, over the last year. They've really dropped. I mean, they've gone from $5.10 pretty much down to previous lows of $1.69. I don't know what this drop is right here. If I had to take a guess, I would think maybe it was a split, but I have to dig into the news. We're going to have to keep digging to find out what the reasoning for that is, but that's what you're looking at here as a fundamental basis of a company. Now, the next thing I want to know is, since they're trying to get into electric airplanes, right? They want to go into electric flight. What are other companies that are getting into the competition of electric flight? So electric flight companies. You want to know their competition because it's not enough for a company to be innovating, right? That's awesome. It's great for a company to innovate, but if there's a competition out there that's already doing it better for cheaper and that's making more money, you're better off investing in that company and not the company that you're looking at right now, right? So you have to look at the competition. And an example of this is Sensonics versus Dexcom, right? Sensonics is a company that I'm very, very bullish on, and they've got great technology with their 10-day, they're not their 10-day, their 70-day, their 90-day, as I was, 90-day continuous glucose monitoring system compared to Dexcom trading for a lot higher. They're trading for $300 and some change, $344. Dexcom only has a 10-day continuous glucose monitoring system. I think Sensonics does it better. I think they have a better continuous glucose monitoring system. I think they're going to be competitive with Dexcom down the road, which is why I'm investing in Sensonics, because I think their technology is better. That is an example, right? That's an example of what you're looking for in terms of competition in the marketplace. So that's what you got right here. Electric flight companies. You've got electric aircraft companies. Easyjet, Boeing, and Siemens are among the companies making electric aircraft as aviation explores new ways to go green. So we're going to start off here with Easyjet. What is Easyjet trading at right now? How do they compare to what we've got going on with Rolls-Royce? They're currently trading at $14.19. We'll look at their financial statements, their annual, and they don't produce anywhere near as much revenue. These guys actually produced $3.88 billion of total revenue in 2020. They trade at $14. One thing that's better, however, is their gross profit. They're much better margins. I'm assuming their cost of revenue is much lower. They're not spending near as much money manufacturing their technology to be able to make flights happen. So pro and a con here. They do produce less revenue, but they're taking more of that home, which is a good thing. but they're trading at 14 bucks. They're trading at $14 off of $3.88 billion of total revenue. You look at Rolls-Royce in comparison. Rolls-Royce in comparison actually made $16.16 billion in 2020, trading at $1.69. Now that doesn't play into the whole equation, right? What you do need to keep in mind is the total market capitalization. So we're going to look at that. We're going to pull up the market cap for Rolls-Royce and just see how that compares. So we're going to close out of that, pull up the market cap on Rolls-Royce versus that company. So RYCEY, market capitalization. And we're going to look at how these two companies compare, right? So market cap for Rolls-Royce is sitting at $14.14 billion. And that's actually pretty interesting because $14 billion company trading at $1.69. How many shares do they have outstanding? It has to be extremely, extremely high. So we're going to look up the shares outstanding according to Market Watch for Rolls-Royce. So RYCEY, Market Watch, and we'll just see how many shares they have outstanding. Because that if there's heavy dilution, it's going to make it difficult to roll up the price. And what do we have for public float? Zero of public float, which is actually interesting, but 8.37 billion shares outstanding. I want to know why that public float is zero. That doesn't make much sense because that public float should be what's available for the average trader, but I know that you can still trade Rolls-Royce, so I don't know if that number is incorrect, but they have extremely high amounts of shares outstanding, which makes it difficult to roll the stock price up because they're so heavily diluted. Something that I would really want to see with Rolls-Royce is for them to do a share buyback or maybe a reverse split. Because what I would anticipate, I don't know for sure. You guys let me know in the comment section. This is why it's great to do this research together. Is I would assume that they have done a reverse split. And they went from $3, they closed at $3.39, and they opened this day at $1.54. So maybe that was a 2-to-1, split. But I'll just do some quick math here. Let's figure this out. $3.59 divided by 2 would be $1.79. They opened at $1.54. So I don't know if that necessarily adds up. If you guys know why there was that drop off right there, let me know. Try and drop a resource if you can so that we can give complete validation to that point. I don't want to mislead anybody. But heavy shares outstanding. And how does that compare to their competition, which would be... where the heck did I put that? I've got way too many tabs open. I always do this. Oh, I pulled it up right here. Easyjet. So how does that compare to Easyjet? We're going to find out. So Easyjet, if we pull that up, Easyjet, what is their ticker symbol? ESYJY. ESYJY. They have a total shares outstanding of 456 million. So much lower. Their market cap is actually lower. They're worth less as a company. They're worth $6.28 billion as compared to Rolls-Royce, which is worth more capital. The big difference being their shares outstanding is much lower. So these guys, understandably so, have a lower market cap. They're not pulling in as much revenue. They're worth less as a company, but their shares are worth more because they do have less total shares outstanding. So that's one opportunity here. Then what you want to look into is how these guys compare in their technology. Where is their electric airplane going? How does this compare to how long it's going to take for Rolls-Royce to go electric, right? That's what you're looking at for just one prime example. Next, we're going to look into, the other electric flight companies. So that's one. You've got Boeing. Boeing, I think, is pretty well recognized. I don't know how far along they are. Boeing is a $255 company, and this is monumental. I mean, I would assume that they have insane total revenue, and sure enough, they do. $56 billion, but they lost money in 2020. My hypothesis being that, hey, you had COVID, you had quarantine, way less people were able to fly. Obviously, I would assume that you've got a very similar situation with Rolls-Royce. It's just why they were negative more so on their previous 2020, gross profit, but what I will tell you is that Boeing has much better profits in comparison to Rolls-Royce. They are still pretty poor. I'm going to be honest with you. So far, what I'm seeing as the best profit margins is Easyjet. Easyjet does seem to have the best profit margins out of all three of these companies so far. And then we're going to pull up Siemens. We're going to see what Siemens is looking like in comparison. Siemens is an $82 company per share, and they pulled in $67 billion in 2020 and pulled home a gross profit of $23.7 billion. Oh, that was quarterly. Annual, though, $67 billion, pulled home $23.7 billion, which is pretty freaking solid. I mean, if you compare this to Boeing, Boeing actually pulled in less total revenue in 2020 and actually lost money, negative $5 billion in 2020 as compared to Siemens pulling home $23 billion. Those are actually really good margins. If I had to say the best, income statement out of all four of these companies, it would be Siemens. But that's not, simple enough to say, hey, just because they have the best income statement, That doesn't necessarily mean that they're going to be the best company down the road, through and through. Now you want to look into the innovation and what these 4 companies are doing that are going to make them different from Rolls-Royce. How is Rolls-Royce going to compete with these guys? What does Rolls-Royce have that is going to set them apart from the rest of these companies? So we're going to look into Rolls-Royce contract deals, because I remember reading something about a Rolls-Royce contract deal, and I want to see what this is. Earns a buy rating from Berenberg Bank. So that was one day ago. You've got share price crosses above. That was a technical analysis setup. You have earnings statements, research and reports. I know that there is something about the Rolls-Royce getting a contract with a jet engine. I think maybe that news was over here available on the news tab. Let's see if I can find that. Thank you to everybody tuning in right now. We got 3,400 people watching. If you guys wouldn't mind dropping a like on the video, I'll tell you what, if we get to 3,000 likes by the end of this live stream, we'll put down a little bit of that crack and give you guys a good toast. Good cheers to everybody that's been chilling. Jade chilling. Boeing has government contracts. Boeing 737 MAX 2020 dropped them down. Gotcha, man. All right, there we go. There we go. So this is why this is awesome. We're working together to make that happen. Working together to make that happen. Buy the dip on Boeing. There you go, baby. But I'm looking for that contract deal, because I remember they're getting a contract deal with a jet engine company. Let's see what we got. I don't remember how far back it was, though. Rolls-Royce appoints, nope. Airbus exploring hybrid electric aircraft technology. Deals of the day. $5.6 billion loss. Africa's new energy market. I'm not seeing that jet engine deal, but we will read into really quick this buy rating from Berenberg Bank. That interests me a little bit. So let's read their reasoning. So this is coming from modernreaders.com. I'm not interested in this. So anywho, Rolls-Royce stock had its buy rating reissued by equities researchers at Berenberg Bank in a note issued to investors on Wednesday. Several of the research firms have also recently commented on Rolls-Royce. Zach Investments Research cut Rolls-Royce holdings from a buy rating to a hold. Morgan Stanley reaffirmed an equal weight rating on shares. I want to read the reason why, though. A hedge fund recently raised its stake in Rolls-Royce Holdings stock. Park National Corporation OH lifted its stake. Shoot, I can't find their... I want to find the contract deal they got with jet engines, because I remember that was pretty huge. Anywho, I'm going to see if anybody has this in the chat bar. Rolls-Royce makes most of the jet engines for a lot of aircraft manufacturers. Contract for Rolls-Royce with the U.S. Navy in January. Thank you. That helps. That helps. Awesome. So it was a ways back. January. Airline outlook dims again. Nope. Gets $1 million of research funding from U.S. government. Oh, that's kind of interesting. For digital foreign object debris detection technology. Interesting. $1 million isn't a lot of cash, but it is enough to do a little bit of something. Honestly, I would like to see more cash than that compared to what they have, available. Honestly, let's look at their total cash that they're sitting on, their cash flow. So annual, what are their assets and what are their liabilities? So looking at that, maybe that's their balance sheet. Yeah, here we go. So the total assets, they've got $40.35 billion of assets. The total liabilities, $47 billion. So they're actually a net negative company right now. They have more liabilities than they do assets. Not by a lot, but $7 billion is still pretty significant, to be honest with you. I'm not finding that jet engine thing, but that's a starting point, right? So we wanted to get you guys going on what you can look into in terms of how it compares with other electric planes, as that is what they're kind of doubling down on to compete themselves with the rest of the market. And you can see that the competition is very strong. We've got Easyjet, Boeing, Simons, all three companies pretty well established already. I mean, I would say the Rolls-Royce is probably a little bit better off than Easyjet. They have a higher market capitalization, but they just have more shares outstanding, so they're worth more, just a little bit diluted, right? So they're gonna have a harder time getting the stock price moving just because of that share dilution. So I'd say they have, they pull in more revenue than Easyjet on that side alone. They are more competitive. But compared to Boeing and Simons, I would honestly say that Simons is probably the best bet so far out of all these companies, just based on income statements alone. I mean, they have great proven success. They've got pretty decent margins. They pull in a pretty decent amount of profit, which is good. You look at their annual, I mean, they're taking home a pretty good amount. I'd like to see a 50% margin or less. I'd like to see them only have to pay about 50% of their total revenue and cost of revenue, but that's not terrible at the end of the day. So next thing I want to look into is how their technology competes. How long is it going to take Rolls-Royce to get their technology out compared to those other three companies? That would be the starting point there. Next thing I'll look into for Rolls-Royce would be this. So Rolls-Royce, actually, we're just going to come to the website again. Rolls-Royce, and I'm going to see what their management team looks like. So the Rolls-Royce management team, right? If we come over here to investors, I want to find out what their management team looks like, because that is very important to consider. Things that you're looking for with management is their previous jobs, right? Where else have they managed? Have they been a board of directors for any of their companies? Have they been a CEO for another company, right? Because think about Elon Musk. If Elon Musk all of a sudden decided to retire from Tesla and decided to go work for PayPal again, well, God, that is going to make him stand out from the rest of the freaking management, and everybody would want him there because he knows how to create a profitable business, right? He's a good guy to have. So you want to pay attention to the management team for a company. So we're going to see what we've got rocking here for management. Let's see what we can find. Management for Rolls-Royce. Right issues, corporate governance, shareholder information, manager shareholding, investor contacts. Not finding it. General meetings, annual report, corporate governance. This is probably it. All right. The matters reserved. No, I don't know if this is it either. 2019, our board governance and corporate matters reserved for the board and its committee's terms of reference. No. Shareholder information. I don't know why I can't find their management. Rolls-Royce management. There we go. Executive team. That's better. Now we're cooking with Crisco, baby. So we've got Warren East. This is the chief executive. So tenure, he was appointed January 2014. He's been around for a minute. Career highlights. He graduated from the University of Oxford's Wadham College with a degree in engineering science. He then went on to earn a Master of Business Administration degree from the Cranfield University School of Management, as well as honorary doctorates from Newcastle and Cranfield. I want to see what else he's worked for. Prior to joining Rolls-Royce, Warren spent 11 years with Texas Instruments and joined ARM in 1994. He was later appointed to the board as Chief Operating Officer, and in 2001, he became Chief Executive Officer, CEO, a role he held until leaving the company in 2013. So he's actually been a CEO for another company already. Under Warren's leadership, ARM matured into an established FTSE 100 business, the world's leading semiconductor IP licensing company, with an outstanding record of innovation and a strong commitment to research and development. So he's got a pretty decorated resume. I think that's worth mentioning. He's got skills as an engineering background, outstanding record as a CEO, deep understanding of technology, which is obviously important for a company that is focusing on innovating in electric airplanes. So pretty important to keep in the back of your mind. I don't mind seeing that at all. Warren leads the company with energy and enthusiasm. All right, that's not really that important, but that's what you're looking at right there. Then we got the CFO, the Chief Financial Officer. What are his career highlights? Where did he come from? What kind of experience does he have that'll make him stand out as the CFO of Rolls-Royce? How is this going to contribute to the company and make them a little better, better off than they were before, right? In this role, panels led the turnaround of Deloitte's UK audit practice. So he's an auditor. That'd be the one of the things you need as a CFO, a Chief Financial Officer. He manages the finances. He's in charge of reading through all their different. He wants to make sure that when they get audited, they're not getting dinged for anything. That'd be absolutely critical. You do want to make that pretty important. He was made partner in 1999 and held various leadership roles in the audit practice before being appointed head of UK audit and risk advisory in 2011. So he's actually an auditor before he became a CFO, and that's huge, which means he understands to a T what he needs to do to manage the company's financial situation. So that's good. How long was he an auditor for? 1999 to 2011. So a huge amount of experience, and that gives me a lot of confidence in them having a good handle on their financial situation, or at least the income statements, right? So you're never going to be worrying about them having malpractice, an SEC investigation, because he knows what they're looking for, right? That's a good background to have. In 2015, Panos was appointed as managing director of the Deloitte Global Audit and Assurance Practice, responsible for a $10 billion business with 4,000 partners and 70,000 professionals. In that role, he led the turnaround and transformation of the practice until leaving Deloitte at the end of 2019. He will join our board as CFO on 3rd of May 2021. So he's not here yet, but he will be there soon. Tom Bell is the president and the CEO of Rolls-Royce currently. So that's the CBE. This is the CEO. Career highlights. Prior to his current role, Tom was Senior Vice President of Global Sales and Marketing for Defense, Space, and Security at the Boeing Company. That's huge. There we freaking go. Okay, so you need to know that. That's big. So them having a previous vice president from Boeing, that's massive. I doubt people even know this. So the CEO, Tom Bell, is actually the previous vice president of Boeing. So he has a great understanding of how to run a successful business. Boeing, by far, out of all of these companies, pulls in the most revenue. You look at their income statements, their annual income statements, very, very profitable. $58 billion in 2020. That was on a down year. I mean, look at 2018, they pulled in $101 billion out of this compared to Rolls-Royce, compared to Siemens, compared to Easyjet, right? By far the most profitable company, which is a good vote of confidence for me. So I like seeing that. He's got experience. He knows how to work through. He knows how to work through this stuff, so that's good. Prior to his current role, he was the vice president for Boeing. Tom was president of Rolls-Royce Defense Aerospace, having joined as president of Customer Business North America in mid-2012. Previously, he had spent over 2 decades with Boeing in a variety of leadership positions within the defense, space, and security business, and began his aerospace career with Lockheed Martin in human space flight. So his career highlights, the thing that catches my eye the most, obviously Boeing. He was the president of the Rolls-Royce Defense Aerospace, having joined as president of customer business. So that's pretty interesting. He's got a background in that aerospace background, which is huge. External appointments, Aerospace Industries Association, executive committee member. So these are the big wigs, guys. That's the big part of the executive team that you want to keep in the back of your mind. If you want to go through the board, you can definitely do so. There are a lot of people here as well to keep in the back of your mind. Executive team is what catches my eye the most, though. So we've read through those top 3. If you want to look at the president, the general counsel, the chief people officer, Ben Story, Ball Steen, right? You want to go through each one of these guys and see what you're looking at in terms of their background, their previous experience, what they bring to the table that differentiates them from some other Joe Schmo that would be working that position. So they have a couple different sectors, it appears. So Tom Bell is the chairman and CEO of Rolls-Royce North America, but you've got other things here as well. I saw that there was a CEO of Rolls-Royce Power Systems AG, so I'd be interested to know what this guy does as well. And then I'm going to look at the chief technology officer, because if they're trying to rebrand as an electric airplane company, that is massive. You need to understand and have a background in what the CTO, the Chief Technology Officer, can bring to the table to differentiate them from the other 3 competitions that are getting into electric flight. So, Andreas Schell is the CEO of Rolls-Royce Power Systems AG. His career highlights. Before joining Rolls-Royce, he worked for United Technologies Corporation, Aerospace Systems. So he has a background in technology, which is also important because they're trying to rebrand as an electric airplane company. Being competitive with Boeing, being competitive with Siemens, being competitive with what was the name of the other company? Siemens and Easyjet. So that's good. Okay. Where he was vice president of digital strategy, having previously held the position of president of the actuation and propeller systems business unit, president of the electric systems. Huge. That's massive. And vice president of aerospace power systems. He had been involved with advanced electric systems in the automotive industry, holding the position of vice president of electrical and electronics core engineering at Chrysler. So he's worked with a pretty big company already, where he was responsible for developing electric systems for Chrysler, Jeep, and Dodge. And as you know, all 3 of these companies are fairly successful. So that gives me a vote of confidence as well. There we go. Last thing I want to look at would be the Chief Technology Officer. I want to see what Paul Steen's background is. Prior to his role, Paul was Director of Research and Technology, accountable for the company's global investment in R&T, as well as fostering innovation and promoting sustaining specialist engineering talent. He joined Rolls-Royce in 2010 as Chief Scientific Officer, and for 2 years acted as the Engineering and Technology Director for the company's nuclear business, in addition to his Chief Scientific Officer responsibilities. Before that, he was managing... Oh, so he's actually worked for Siemens. There we go. Yeah. So he was managing director of Roke Manor Research, and in 2003 was appointed to the Siemens UK Executive Management Board, leading technology and contributing to business strategy. What was Siemens looking like in 2003? I like that they gave a date there, so now we can come back and we can see how successful, or if he was a contributor to their success. So coming back here to 2003, what are you looking at? Well, 2003, they ended up growing. I mean, they went from a company worth $19 to a company worth, at its peak, about $36. So that's a good thing to see. They grew while he was working at that company. So that is a sign of confidence for me as well. And you want to fact check as many things as you can to see how they differentiate themselves from different companies. Massive. So I like that. Honestly, I really like this this board of directors. I like their executive team. Their executive team, not board of directors. That's huge. That gives me a lot of confidence. They have some people that have actual experience in the airplane sector. They've got people who have experience with technology, with Simons as well, Boeing. Both companies who are trying to get into the electric game, and they've come over here to work with Rolls-Royce instead. So that's pretty massive. I dig seeing that. Next thing we're going to do, now that we've looked at the board of directors, we understand the competition in the market, right? We understand that they have a lot of competition in the market, is their timeline. How much time is it going to take for this company to get their electric propulsion systems out? So let's come over here and look at their products and services, and I want to see their power systems and how long it's going to take them to go electric. So let's just click on their power systems. Discover more solutions, MTU, medium speed engines, power systems, latest news. Let's see what we got. 18 March, so that's pretty recent. Use of green methane in transport and power. Glasses. God dang it, you're right. I looked at the chat bar. Thank you, Andrew. I appreciate that. Appreciate that. Use of green methane in transport and power generation. Researchers and industry present interim results of the Methane Quest project. So that's for producing gas from renewable sources. That's not necessarily electric vehicles, so that doesn't interest me at all. I'm going to be honest with you. We're going to come back to innovation, though, and see what we got in terms of their electric. I want to see a timeline. I want to know a timeline because we need to know when things are going to happen. So pursuing cleaner, safer, more sustainable power. Explore our electrification concepts. This may be where we start. So the propulsion, we already read that. Efficiency, we've looked at that. We've looked at cost. The time is now. We've seen that as well. But I want to see a timeline. Key EU flight path 2050 targets. Reduce CO2 emissions by 75%. So this is a very long-term timeline is what they're looking at right here. What sustainable aviation will look like. To understand the revolutionary impact of electrical power, you need to rethink the way commercial and private aircraft take off, fly, and land. That's good to know, but I want to see a timeline. Future plans 2020 and beyond. There are 4 primary markets hybrid electric aviation will capture in the decade ahead. Small propeller aircraft, hundreds of planes look to set to be sold in the next few years to companies who use planes for training or sport. It'll be the first time large segments of the public will see and experience electric flight. Small planes with ultralights to the lower end of CS-23 will play a key role in bringing the experience of electric flights to pilots. You've got air taxis. That's kind of fascinating. Electric vertical takeoff, and that's something I think they can compete in. And landing applications have huge potential to revolutionize commuting within cities. What the heck? Are there actual air taxis anywhere? "14 awesome flying taxis and cars currently in development." Wow. What the heck is this? We live in the future. Air taxis? Dude. That's crazy. Wow. Okay. I mean, if they can dominate that, this has been the most exciting piece to me. Air taxis? Dang. Whoa. Okay. Electric vertical takeoff and landing applications have huge potential to revolutionize commuting within cities. There are a variety of developments ongoing to create air taxis for short-haul, intra-city, and city airport trips with infrastructure providers, regulatory authorities, and municipalities all on board to make this exciting mode of transport widely available. I want to dig into this a lot. The air taxis, that's very interesting stuff. We're going to come back to that. Actually, screw it. We're going to get into it right now. That has my attention. I'm excited. That's cool. That's sick. Electric propulsion for a disruptive mobility concept. Imagine a flying taxi that can take you to your destination in minutes, not hours. A silent vehicle with no carbon emissions that can take off and land in the middle of a city. A new aircraft application that might move us sooner than you think. Wow. Okay. Air Uber. I'm digging that in the chat bar. That's cool. Prepare for takeoff. I want to see a timeline. Look up to the skies in the next decade, and you can well see the next generation of clean, quiet electric air taxis delivering goods and taking people to work. The potential of air taxis and generating an enormous amount of buzz. Numerous startups have pulled in double and even triple-digit $1 million in venture capital funding, and interest in convincing concepts remains high. Airbus believes the eVTOL market could one day outspace its existing $7 billion business. Man, wow. Dude. Jesus. I don't see a timeline here. These vehicles will soar over traffic in a way that every commuter dreams about, and they could be in the skies by the early 2020s. There we go. There's something. So this is what gets me the most excited, man. That is freaking sick. That is so cool. And it says they're quiet. I mean, if it's electric, I mean, I can speak from experience because I drive a hybrid car. I drive a 2020 Honda CR-V, and it's one of those hybrids. So I'll pull it up real quick. Honda CR-V hybrid. This is what I drive. And these vehicles are hybrid. So they can go electric or they can go gasoline. And when it's electric, I can't hear a freaking thing. Like, it's like driving a car that's not on. It's insane. They're incredibly, incredibly quiet. So I think that there's a lot of potential for that to be a competitive market. And if it's as early as the early 2020s, that ought to be massive. I think that's pretty cool. Matt Weiler says that electric aircraft already has a deal with United Airlines for $600 million. We're going to read this really quick. That's interesting. Let's pull that up. Guys, I'm digging this. I hope that you guys are digging this research sort of game here. So let's pull this up. Archer to go public. United Airlines invests and orders electric aircraft. So this would be competition. When was this posted? I want to see the date on this. This was posted February 10th, 2021. So pretty recent. Electric aircraft startup Archer will go public through a merger with a blank check company backed in a deal valued around $3.8 billion and backed by an order and investment from United Airlines, among the first major airlines to commit to the purchase of air taxis. What does the timeline look like? Archer and Atlas Crest said the proceeds include a $600 million private investment from United Airlines Holdings Incorporated. Yada, yada, yada. The deal is the latest in an increasingly crowded market dominated mostly by aerospace companies and tech startups trying to cash in on industry efforts to reduce carbon emissions. So I think it'd be a competition. It would be who gets to the finish line first. And it looks like these guys are already way ahead of the curve. That's massive. Raised $500 million in its IPO in October. The veteran banker founded investment firm Moelis and CEO MC.N in 2007. Interesting. Wow. Okay. Archer to go public. Is Archer already public? Let's find out. Archer Daniels, Archer Materials, Archer. It looks like there's an OTC. I don't know if this is it, though. It might be. Nah, definitely not. That's not it. I'm doubting they have gone public yet, but dang. I mean, I'm telling you, that would be competitive. If that can be a competitive piece of the market there, I'm digging that. That is very fascinating. So anywho, coming back, what the heck just happened there? That was goofy. So you've got the air taxis, you've got commuter aircraft, which is also very fascinating. I think that could be competitive. These slightly larger commuter class planes have a maximum capacity of 20 seats. Oh, I don't like that though. I don't like that they only have 20 seats. That's not a pro. That might take some time to get used to. You'd probably be paying a pretty hefty amount of money to get a ticket for a commuter aircraft like that. Then you've got regional aircraft. So developing power and propulsion systems at MW scale for future hybrid electric aircraft. So this is very early stage stuff. I think honestly, to be real with you, the thing that catches my eye the most is the small propeller aircraft, the air taxis. The commuter is cool, but I think it's going to take a long time for this to be profitable. They'd have to charge probably 2 or 3 times as much per ticket to be able to make money on this on only 20 seats. Like, that's just not. I mean, the upside being that, you know, the cost of revenue will be lower. They've stated themselves that. They stated themselves that the cost of revenue or the cost of manufacturing will be lower. So that's a good thing to see. I actually can see some pretty good upside, at least in their fundamental value, their qualitative value, the stuff that's non-tangible, right? Where they're going to compete in the market, how they can compete with other, you know, companies out there. The downside being with Rolls-Royce, at least so far, is that they've got really big competition. I mean, Siemens is a smaller company with less shares outstanding, so Rolls-Royce is bigger than these guys, but I like Siemens and the fact that they're not as diluted. That's big. Boeing, obviously the leader. Easyjet, also being another solid company. But this isn't very highly traded. I mean, there's not a lot of volume coming in on these guys. They don't have a lot of competition. Rolls-Royce does produce a pretty decent amount of revenue, though. I mean, you look at their financials, and their annual is very, very solid. It's not bad. $16 billion. They lost money in 2020 with the whole quarantine and, aircraft pandemic crisis. So I think it's got pretty solid potential. I like their board of directors. I like their executive team. I like their CEOs. I think they're branching out into a couple different sectors, which is good. Next thing I want to look into is this. We're going to come into the data side of things. So what does Rolls-Royce have going on in terms of data that we can look at and is significant? So Rolls-Royce, we'll pull up here really quick. Hopefully, Rolls-Royce. Can I even look at them? Maybe they're just not available on Ortex since they're OTC market. That could be it. Maybe I'm just misspelling it. RYCEY, RYCEY. Yeah, it looks like I can't look at them on Ortex, but that's okay. Rolls-Royce institutional ownership. So we're gonna look at that. So institutional ownership on Rolls-Royce, what are we looking at? Looks like they have 33 institutional owners. Institutional shares makes up 48.7 million. Institutional value per $1,000 comes out to, it looks like $37 million. So looking at 13 Fs in fund filings, they have some recent buyers, and actually quite a few buyers over the last couple of months. Wow, look at some of these guys. $3.1 million coming in from Active M International Equity Fund. I want to look for some big name institutional investors. So stuff like Vanguard, BlackRock, those are two big ones. And if you see them invested in any companies, that's pretty massive. But decent size here, $11.5 million from CIUEX, Six Circles International Unconstrained Equity Fund. So that's a pretty decent stake with a total value of about $17 million. These guys sold out. But not a lot of sellers. I mean, a lot of buyers have come in. It looks like in 2021, especially in 2021, 23 million shares from Douglas. So that's pretty huge. You've got, yeah, I mean, there's some pretty decent buyers that have stepped in, especially in February and March. So I think that's a good sign. That's a vote of confidence for me. The only thing that I don't like is you can't see the percentage makeup, but I'm assuming it's because it's an OTC market stock. You're not required to see as much of the percentages that make up institutional ownership. But I do want to look at the insiders ownership as well. So we'll look at Rolls-Royce insider ownership, and we're going to look at what this number looks like, because if insiders sell off stock, that is a bad sign. You don't want to see that. So we're going to look at this. We're going to see what the insider ownership looks like on Rolls-Royce as of now. Holders. BlackRock in 2019 shares owned 141, so that's insignificant. Capital Group holds 356,800. Is this per thousand though? That's what I want to know. Goldman Sachs also holds from 2020. Decreased. Insider transactions, that'd be good. Insider transactions, no purchases, no sales, no sells. Most recent is Goldman Sachs. I want to see their major holders according to Yahoo. Yeah, it doesn't have any data. It says percent held by institutions is 0.06. Top institutional holders, this isn't taking into consideration Fintel, though, because Fintel said that there was some recent buyers as late as March and February. So I don't think this is updated. I'm not going to take what Yahoo's saying with a grain of salt. And guys, this is a completely unopinionated. It's purely data and research-based opinion. I have never bought into Rolls-Royce. I have no reason to misguide you. We're simply just looking into the stock and telling you guys what I think. So it looks pretty solid. I'm not going to lie to you. I came into Rolls-Royce with a lot of negative opinions. I thought to myself, why would anyone buy into this dog crap company? They've done nothing but bleed for literally 5 years. But if they can really rebrand, I mean, to be honest with you, what this reminds me of right now is Microvision. Microvision did the exact same thing for a while. I mean, they were a company that traded pretty sideways for who knows how freaking long. I mean, you look at the max charts. Look at this. All they've done is go down. They went down from $548 to 15 cents, and all they did was bleed for a long time. But Microvision rebranding as a company, getting into automotive LiDAR, that reminds me a lot of what Rolls-Royce is doing right now. They're transitioning away from fossil fuel and the old school airplanes and getting into electric airplanes, which I think could be actually competitive. I don't mind that. I do also like that they have kind of a legacy to themselves. They've been around since 2001. Which adds value to a company. They have existed for as long as 20 years, which is pretty huge. That gives shareholders some, I would say, confidence that they're going to be able to manage the ups and downs, the swings, the highs, the lows, right? They're pretty much at an all-time low right now. They're not doing great at the moment, but if they can turn things around, I actually see some real fundamental value here. I do. I like that there's recent institutional buyers. I like their executive team. I like their CEOs. There are multiple CEOs that are working in different branches. I like that they've got experience from Boeing. I like that they've got experience from Simons. That's a good vote of confidence for me. And I really like their electric taxis, the ability to transport people to work, from work, city to city. What would be the word for it? Commutes. Yeah, commutes. To be able to commute from, a really small location. So, like, I can see that being a huge piece of, commuting in places like New York, Chicago, maybe Detroit. the big cities where it takes you a couple hours to drive, 10 miles, right? Just because there's so much freaking traffic. That'd be huge. I see a lot of opportunity there. I don't mind it. I'm going to be honest with you. I think Rolls-Royce has some really potential high upside. And if you look at them on a 1-month chart, 3-month chart, we're going to start here. Their bottom is $1.31. And you can purchase these guys on Webull. There's upside here. All that I would say is to dip your toes. They've existed since 1904. How about that? I was just basing that off of Webull, so my apologies. Not trying to mislead anybody. Thank you for the correction, AME. That I appreciate that immensely. But they have a legacy to themselves. They've been around for quite a while, so that's solid. I would say it's worth a small stake. It's worth a small stake to me. I would dip your toes in the water, because it might take some time for this to really play out. If you want to play Rolls-Royce, my opinion would be to play this long term, because it's, as of right now, it's going to take some time. I mean, to me, this is going to be a recovery play along with a rebranding play. You'd have to wait this out if you really want to see the potential upside. I still don't know why they sold off like this. Does anybody know why Rolls-Royce back? Let's just look at the date. That would have been in December. So I'm gonna look at the news back in December and see what we have, because there's got to be a reason that it sold off like that. December. U.S. military gives boost to flying cars and taxis. That was a while back. I'm not seeing it. Why did it do that? Because that was a major drop-off. I mean, that doesn't even make sense. That makes no sense at all. If anybody has an answer to that, that would be awesome. Actually, I could see it being a major thing in places like Disneyland. Imagine an air taxi that has plastic shell that looks like an X-Wing that takes you to Star Wars Park area. Yes! Phantom Savage. I mean, you definitely get it, man. I actually see some real potential upside here. I don't mind it. And the thing that I think as a downside, right? What is the absolute worst case scenario here? Is the downside, the lowest it's ever hit is $1.03. I don't see it hitting lower than $1. And I think if you buy it at $1.69 and it drops down to $1, you can average down. I mean, it can be absolutely okay. That doesn't bother me at all. Personally, I would wait. It does look like it's a little bit of a falling knife at the moment. This is not a stock that's tradable during regular market or extended hours, as I was. Only tradable during regular market hours, since it is OTC market. But potentially they could get uplisted down the road if their company does continue to grow. One thing I don't like, being completely honest with you, is the shares outstanding being as high as they are. That is a huge con. Big downside. They have over 1 billion shares outstanding on the company. We're gonna look at this again and just look at the exact number. What is that shares outstanding? So they're a $14.5 billion market cap company. And the shares outstanding. Let me pull up Market Watch again. I could just do the math, but I'm gonna be lazy. I'm gonna be lazy and just look up on Market Watch so we know. Market Watch, I think it was pretty freaking high. So that's a downside. They're very diluted. $8.37 billion shares out, or 8.37 billion shares outstanding. So very diluted. It's going to be really hard to drive price action here. I would enjoy if they did a share buyback down the road, because no matter how high their market cap gets, you're just not going to see as much upside with that many shares outstanding. So that's my personal opinion, and that would make sense why you saw that major drop off if they did a split. Like if they did a 1-to-3, let's say that, or a 1-to-2 even, that would double their overall shares outstanding, which is not typically a good look for a company. But if that would make sense as to why that drop happened. And yeah, that's my opinion on that. I personally don't mind it. I think the pros outweigh the cons here. The only thing being that the shares outstanding is extremely high, and it would take a long time for the stock price to get back up. I wonder if this company ever had a dividend. It doesn't appear so, because usually it shows dividends here, but that is OTC market stock, so maybe they did, maybe they didn't. We can just look it up really quick and find out what they have rocking. Rolls-Royce dividends. Yeah, it looks like they did. Looks like these guys did have a dividend at one point, so maybe that'd be something they can reestablish down the road. 0 years. Maybe not. Payout history? Payout amount. Yeah, there we go. 2019, 18, 17. So they did use to pay out dividends by the looks of it. So that could be something that they end up doing again down the road. If you are interested in dividends, that is interesting. So there you go. As high as 15 cents in 2017, 15 in 2018, 14.9 in 2019. And then they discontinued their dividend in 2020. I'm assuming because of the problems that they've been having as a company. So that's just looking right there, my friends. All right. There we go. You were looking at the OTC ticker of Rolls-Royce. Look at RR. Let's see what we got. So why are there two different tickers for Rolls-Royce? Because when I get asked about Rolls-Royce, I get asked about the RYCEY stock. Rolls-Royce Holdings PLC. What the heck? Why is that not on Webull? I don't see it. Let's look up Rolls-Royce. You got RYCEY, RYCEF, RLLCF, and RYCRF. All OTC markets. That is so confusing. What the heck? What in tarnation? What in rehydration? It's not even on Webull. This was delisted, so that doesn't even exist anymore. Huh. I'm not entirely sure. Well, there's that. Hey, bro, what do you think about ARK Invest sets a new price target of Tesla at $3,000 for 2025? I think it's legitimate. I like Tesla. I think it'll eventually hit there for sure. RRI only tradable on London Exchange. There you go. There's your answer. So not tradable in the United States, and that's where I'm from. London Exchange. There you go. There you go. There it is. Appreciate you guys. See, that's what's awesome. That's why I like doing this research with you guys together. So that's my take on Rolls-Royce. We dug into a lot of dirt, a lot of the details, a lot of the nitty gritty, trying to find whether I think it's a pretty good opportunity here. I think that it is. I'm going to be honest with you. The only thing that I don't necessarily like is their competition in the electric airfield, the aerospace sector is pretty high. Boeing, good company. Siemens, good company. Easyjet, pretty decent company. Rolls-Royce pulls in more revenue, more shares outstanding. That's what I've got for you guys on that. So pretty good deep dive on Rolls-Royce right there, and I'm gonna end up clipping that out so we can have a video on that. It was gonna be pretty long. It'll probably end up being like 45 minutes to an hour, but if you ever want to come back to that, then you don't have to dig through this live stream and find exactly where we talked about Rolls-Royce. That'll be an opportunity for you. So we'll separate that in case you want to check it out, and that's what I've got for you guys. So all right, I'm gonna take a quick breather right here really quick and just send out a couple of texts because I have some people waiting to hear back from me. So just give me 1 second. I appreciate that. And I miss you. There we go. All right. Thoughts on ALLIF. They acquire land in the lithium triangle. Any long-term potential considering the potential supply and demand for EVs? One love. So ALLIF, I don't know anything about the company, lithium. OTC market stock, not tradable on Webull. You look at them all the time. They've been as high as $1.77. Currently on a nice upswing though. These are monthly candles, so you'd have to play this pretty long term, I think, if you want to make some real good cash. But I see some upside there for sure. There you go. Thoughts on iron condors for those stocks trading sideways for longer periods of time. I'm gonna be real with you, man. I don't know what iron condor is. An iron condor is an option strategy consisting of 2 puts, 1 long and 1 short, and 2 calls, 1 long and 1 short, and 4 strike prices, all at the same expiration. Huh. The iron condor earns the maximum profit with the when the underlying asset closes between the middle strike prices at expiration. In other words, the goal is to profit from low volatility in the underlying asset. The iron condor has a similar payoff as a regular condor spread, but uses both calls and puts instead of only calls or only puts. Both the condor and the iron condor are extensions of the butterfly spread and iron butterfly, respectively. And you want to use the iron condor as a strategy for stocks trading sideways for longer periods of time. That makes complete sense to me. I mean, I dig that big time, big time. I mean, if an iron condor, the whole purpose of that is for low volatility, and you make the most cash if it ends up between the strikes of your calls and your puts, why not? I mean, if you benefit from the lack of volatility, do it. The risk is as that the volatility goes up, but that's why you kind of have that you're hedging a little bit, right? So if you have calls and you have puts and it goes up, well, you kind of make back what your premium was if you end up losing out on that. You just don't make as much money, but you're still insured by having those calls and those puts, both short term, long term. So I think that makes a complete sense. You know, I've actually never heard of an iron condor. That's interesting. Okay, good stuff. There we go. So if you didn't know what an iron condor is, now you know. Now you know. It's an options strategy consisting of 2 puts and 2 calls. 4 strike prices, all at the same expiration date. There you go. Cowabunga it is. I think RYCEYF gives dividends and RYCEY doesn't. There's a chick on StockTwits knows everything about it. Her name is S-Trades Sophia. Okay. StockTwits. Iron Condon for AMC. I don't think that'll work out. I don't know if you want that on AMC. AMC is pretty volatile. I think you get... That's funny. Oh, chat bar, you never let me down. You never let me down. Let's look up her name. S Trades Sophia. Maybe I searched it wrong. There it is. There she is. So if you want to check her out, here it is, man. Cowabunga. All right. If you're on Robinhood, I feel sorry for you, son. You think you have shares, but you don't own none. Says John. I've never liked Robinhood, I'm gonna be honest with you. Even before that whole debacle, I just thought that Robinhood was too simple. I like being able to do data, to do research, to dig into stocks, and I just feel like Robinhood doesn't give you that opportunity that other brokerages do. All right, the big disruption to silicon tech stocks in the next 10 to 20 years will be quantum. Make sure your companies are looking into quantum cryptography. Quantum cryptography, interesting. Quantum cryptography. Let's dig into this. Quantum cryptography is the science of exploiting quantum mechanical properties to perform cryptographic tasks. The best known example of quantum cryptography is quantum key distribution, which offers an information theoretically secure solution to the key exchange problem. The advantage of quantum cryptography lies in the fact that it allows the completion of various cryptographic tasks that are proven or conjectured to be impossible using only classical communication. For example, it is impossible to copy data encoded in a quantum state. If one attempts to read the encoded data, the quantum state will be changed due to wave function collapse. This can be used to detect eavesdropping and quantum key distribution. I'm going to be honest with you. I'd have to dig into this more. I'd have to look into quantum cryptography. I don't know a lot about it, but I'll take your word for it, man. If that's any sort of, piece for anybody to talk about, there you go. There it is. There it is. Brother, over 50 million of trading on AMC after hours dark pools. If that's why the stock went down after the bell, per black box stock, 75 million. Oh, it's totally possible. The dark pool, man, is really freaking sketchy. If you don't know what a dark pool is, we're going to just show you really quick. This is definitely worth talking about. Dark pool for stocks. Check this out. In a dark pool trade system, investors place buy and sell orders without disclosing. That is just so messed up. Without disclosing either the price of their trade or the number of shares. Dark pool trades are made over the counter, OTC. This means that the stocks are traded directly between the buyer and seller, oftentimes with the help of a broker. And if what you're saying is correct, 75 million with this dark pool system, nobody would even know that's taking place, which is insane. That's insanity. I just can't believe, and I guarantee you, that's happening with AMC and GameStop both on a regular basis. So absolutely crazy stuff, guys, for sure. What are your thoughts on EYES? 107% short interest. I am bullish on EYES as a swing trade. I think they're going to do extremely well. In fact, I put out a notification to my Discord and said, guys, play EYES as a swing trade and you're going to make good money. Unfortunately, they pulled back a little bit here at the end of the day. They pulled back to about $14.32. My buy order went out as a $14.50 buy on what would have been a couple days ago, and it did dip down to that as an opportunity. I think some people likely cashed out at $17.95, and then you could have reestablished at the floor down here at $13 and done pretty well. But I think EYES will treat you well. I actually think this is going to be more than just a day trade opportunity. I think it's got some really solid swing term potential for sure. And I say that because it's got a lot of strength. I mean, it ran up to $26 and its pullback was not that bad. You look at this Fibonacci retracement, 61.8%. So ideally, I would have liked to see 50, but 61.8 is not bad at all. I like that. And it's growing. It's setting higher lows and higher highs slowly but surely and getting ready to retest, I think, ultimately $26. Can you imagine if you bought it at $1.40 and rolled it up to $26? Jesus, that's disgusting. Absolutely dirty, man. Really good. I saw up here that somebody dropped a $50 super chat, so I'm going to address that. Yo, Trey, emailed you about sponsoring your channel. I'd love to sponsor you for a shout out to my own channel, Azoras, where I discuss great investing ideas. Here are a few tickers with great potential. DBI, DUFN, OUST, and PCT. DBI. We'll dig into that first. Designer brand. This is a New York Stock Exchange company. What do they do? Consumer cyclicals, retailers, specialty retailers, apparel and accessories retailers. How do they look long term? Max. They're definitely on an upswing right now. I dig this as a good midterm to long-term potential stock. I'd say this would be worth holding for a year or two. especially to setup wise. I mean, their setup is beautiful. They've broken out of this descending level of resistance. They're now on an upward moving channel. I don't think they're going to continue that rate of growth forever, but I mean, monthly wise, they're really setting some good higher lows and higher highs from $4 up to $16. That's a 400% growth in about 5 months. You can't ask for better than that. That's very, very, very solid, guys. By the way, I get questions about this all the time. If you're wondering what brokerage account I'm using, this is Webull. I've got a link to the chat bar up there if you want to check it out. I don't care if you buy it. Get into it. I don't care if you do or you don't. It's entirely up to you, but it's available there because I get asked all the time. So there it is. What do you think about investing in bonds? Says Pilot Flying J. Personally, I'm never going to invest in bonds. I think the American dollar depreciates in value on a regular basis. So bonds, for anybody wondering what bonds are, I mean, maybe that's a really dumb thing to talk about, but you never know. We have a whole variety of people who are investing in stocks, in bonds, in real estate, whatever it may be. So I like to break it down to the simplest ape language, just in case you don't know, right? So bonds are units of corporate debt issued by companies. We're just going to click on this bond, right? So what is a bond? A bond is a fixed income instrument that represents a loan made by an investor to a borrower, typically corporate or governmental. A bond can be thought of as an IOU between the lender and borrower that includes the details of the loan and its payments. Bonds are issued by companies, municipalities, states, and sovereign governments to finance projects and operations. Owners of bonds are debt holders or creditors of the issuer. Bond details include the end date when the principal of the loan is due to be paid to the bond owner and usually includes the terms for variable or fixed interest payments made by the borrower. So the key takeaways, right? Bonds are units of corporate debt issued by companies and securitized as tradable assets. So it's a tradable, essentially you're trading corporate debt, right? I don't like playing bonds. That's my personal opinion. Usually when bond yields go up, it scares people away from the stock market. You don't like seeing that. You could play them short term. Personally, I wouldn't. I think there's better investments out there than bonds, but it's entirely up to you. A bond is referred to as a fixed income instrument since bonds traditionally paid a fixed interest rate. So you do get paid a fixed interest rate on bonds to those debt holders, right? The interest rate depends. It will transition. It will change on a day-to-day, month-to-month, year-to-year basis. With inflation going up, interest rates, could change as well. So that's entirely possible. Bond prices are inversely correlated with interest rates. When rates go up, bond prices fall and vice versa. So that is the relationship between interest rates and bond prices, right? Keep that in the back of your mind. Bonds have maturity dates at which point the principal amount must be paid back in full or risk default. I don't play with them. That's my personal opinion. You guys do what you like to do. That's entirely up to you. Guys, I think we're going to wrap up this live stream. I don't want to go for as long as I usually do, but we're going to wrap this up, and I'm going to take out some clips. I'm going to spend the next couple hours doing some editing, taking out the meat and potatoes about the AMC shareholders meeting so that you can rewatch that. We're going to go back over Rolls-Royce and any other things that I think are worth talking about from this live stream. I'm going to clip those out so you guys can come back and watch them if you would ever like to. Dig into that meat and potatoes of the research that we've done. I think we're going to do this again tomorrow or at least sometime down the road. I think that this is a good thing. So if you guys enjoyed this, let me know. Drop some grills in the chat if you like this sort of research, this chill vibe where we can just talk about different stocks and dig into the meat and potatoes. We'll try and find a new ticker every single weekend where we can dig into it and learn a little bit about something. So that's what I've got for you guys. Hopefully you enjoyed the video. Please drop a like on the way out. It does help support the channel. It means a lot to me. Thank you to everybody that's dropped the super chat. Hopefully you guys are able to read that message that I dropped in the description box. I was not able to go through every single one of these. All the super chats, but I did make that public that we are just going to dig into the meat and potatoes here, so don't feel like you need to drop me a super chat. It's absolutely 100% okay, guys. I did not end up talking about Bitcoin. No, shoot. I will come back, though. I think we're going to do Bitcoin tomorrow. I've got some stuff that I forgot I've got to do, so unfortunately, I'm going to take that out of the title really quick. My apologies, guys, but we will talk about Bitcoin down the road, so hopefully that's okay with you guys. Hope you're okay with me wrapping this up. We will come back again. It's been an absolute blast. I love doing this stuff. We'll be back again, so thanks for everybody that's tuned in. Appreciate coming to the live stream. My friends, my family, my fellow Gorilla gang, you know what it is. Take it easy, my friends, and peace.